Hello and welcome everyone. This is Professor Siddharth Surana. I hope you guys are doing good. मैं तो हमेशा मस्ती रहता हूँ. Let us go ahead. We are doing CA, Inter, Tax, Direct Tax, NTTI. Okay. Under NTTI, we are done with non-taxable, that is exempted. 5 heads of income, clubbing of income, set off and carry forward of losses. Bro, we are still not done with NTTI. NTTI comprises of 9 chapters, is what I told you at the beginning of your syllabus itself. And we have to now continue. So, ladies and gentlemen, we are doing a chapter called deductions. These deductions are going to give you some tax benefit. We are going to subtract this amount from your gross total income. GTI minus these deductions will be equal to your NTTI, the amount on which you are supposed to pay tax. Correct? Eh? That means one thing is for sure, these deductions are for your tax benefit. Correct? Eh? These deductions will not be more than your gross total income. You can't make your income negative by taking deductions. And when we say GTI, in that also, if there is any income which is taxable at a special rate, that is not going to be considered in this. So there won't be any deduction against income taxable at special rate. Every time we calculate deduction, we have to separate our income into normal rate income and special rate income. In your inter syllabus, there are only 4 special rate incomes: 111A, 112, 112A, and 115 double B cash of business. You won't be getting deductions against these incomes. So you have to take your other income and take deductions against that other income. Ye correct hai, bro? Hello. Then the biggest part or the most important thing was in the introduction that deductions are divided into 3 primary categories, and the middle category has subcategories. First one is expense related, where you have to spend money. So show me your hand. Put it in your pocket. Nahi hai pocket. So where do you keep your currency or your important stuff? So put it in your bag. Remove some money and spend it. It can be an expenditure, it can be an investment, and we will give you deduction. Life insurance, medical insurance, etc. are for your tax benefit. Second is income related, where you have to earn income. Can't kill it, 2 tight slaps I will give you. Look at your eyes. You have consumed your own stuff and come to class. You don't have to earn income. You have to earn the particular income. Then you will get income related deduction, and other deduction only, one section, that is 80. You don't have to do anything. You don't have to spend money. For some people, spending anything is of no use. You have to earn income. Without income, there is no question of deduction. But you don't have to earn any particular, any specific income. Just other deduction. Under income related, there are subcategories. Specific income related, that is those incomes which you are putting effort to earn, and then other income related, they happen on their own because they are like other income related deduction. Bank interest, 80 TTA, 80 TTB, we are done with that. We are done with, for example purposes, one specific income related deduction, 80 QQB also. We are done with 80 U. But the biggest category of your chapter is your expense related deductions. These are those deductions which you will be eligible if there is any outflow of money from your pocket. So you have to spend money and be eligible for deduction. And out of this, the most important, the most popular in real life, maximum people are aware only of this. They think this is chapter 6. Believe me, dear students, that day when you start earning your incomes and you stay in old regime, that is also a big question, because we are aware that the deductions are not allowed only in the new regime. You may put it this way, that in new regime, your GTI only is your NTTI. The first deduction which I took in my life when I actually started having income under tax bracket was ATC. Any person who is rising from lower class, middle class, trying to go into tax brackets, you go in tax brackets where you earn more and more income. The first way in which you will save tax is going to be ATC. ATC is basically Miscellaneous investments and contributions. In this section, the government has given a list of about 25-30 different types of investments. Please listen to this carefully. What is common in all of them is somewhere they are going to secure the future of you and your family. That way it is a personal expenditure. So personal expenditure has got no scope of any tax benefit. But the problem is government wants to encourage savings and investments in small and middle class. The whole idea behind ATC was encouragement of savings, encouragement of investment habits in middle class. And therefore government started giving tax benefit. For example, life insurance. You think it safeguards your family, your future. If you are the sole breadwinner, something happens to you, the family will have some money to survive. For example, tuition fees of your school, children ka school. Is that safeguarding your family ka future? If you take a home loan, you have to pay EMIs. EMIs comprise of two amounts, the principal and the interest. The interest we have already seen tax benefit somewhere. Where? Home loan ka, interest ka, we have already seen tax benefit somewhere. Where? House property, SOP limited but LOP unlimited. But principal, there is no tax benefit. We will give you deduction of that principal. Don't you think you are safeguarding the future of your family? If you make investment in provident funds, superannuation fund, are you not safeguarding the future of your family? They have given a range of investments. The common thing is you are with these different, they call it miscellaneous investments because between them they are not related with each other. What is common is they are all together safeguarding your family. So take all these investments as a tax deduction. In simple language, take one of them as an example, life insurance premium. That way it's your personal expense. We don't give any PGBP deduction of personal expense, but we want to encourage the habit of savings and investment. So you pay your own life insurance premium. You are not doing any favor on the government or the income tax department. You are doing it for your own family, no? But we still want to encourage it. And how are we encouraging? We are going to give you deduction under section ATC of this. Do you understand, everyone? Subject to the following conditions. Sir, do we have to learn the list of that 20, 25, 30 list? You don't have to learn the list. What you will have to do, I will tell you. Don't worry. But let's start with the basics. Are we granting you deduction for your personal savings and investments? Subject to the following conditions. This section is going to be applicable only to individual or HUF. Sir, company, firm are artificial persons. They cannot take life insurance of their memorandum or partnership deed. They will take of their employees. Now, for that expenditure, you don't need ATC. Why? Why? Where is the deduction? In PGBP, salary. In PGBP, when you incur any expenditure on your employees, you show it as a business expense. Think about it. For a company firm, it is a business expense. So they are going to take deduction over there. They don't need this deduction. Who are those people for whom it is a personal expense? Individual HUF. And therefore, these are those people who don't get deduction under PGBP. And therefore, these are those people to whom we will give deduction under ATC. This section will be a deduction only for individual HUF. Company firm and they can take life insurance, but they won't be getting the deduction here. Is that understood? An individual will get deduction in this section if he is making the investment for himself. You are making investment for yourself, you will be eligible for the deduction. You are making investment for your spouse. Now, every time they write spouse anywhere in income tax law, they do mention spouse of that individual, which we often refer to as own. Goes without saying. So now the moment I say spouse, you stop wondering and thinking, so whose spouse? It is always it is own spouse. Nowhere there is a provision of your neighbor's spouse or etc. There is no such provision. So spouse. Huh? Kya Chandu? And children. You taking life insurance in the name of your children. Means you are paying premium and children are the policy holders. You will be eligible for that also. And in case of HUF, HUF can take life insurance premium in the name of any member and HUF will be eligible for deduction. What exactly is life insurance? You pay premium to buy the policy, and if the insured event, that is death or maturity, takes place, so the company will give you money. The individual can pay own premium and get deduction, spouse ka premium and get deduction, children ka premium and get deduction, and HUF can pay any member ka premium and get deduction. Everyone is with me? Correct? Hai? Everyone is with me? You will have to now answer some questions that I ask you. You just have to say deduction allowed means yes, or deduction not allowed, so no. You just have to say yes or no. Whether deduction will be allowed or no, you just have to say yes or no. Mr. X is an individual. He is paying life insurance premium. Deduction allowed or no? Yes. He is paying the premium for himself. Yes. He is paying for his wife. Yes. The wife is elder than him. Yes. Deduction allowed? Yes. Elder than him? Okay. She is earning more than him. She is independent spouse. Yes. So deduction is allowed. She is non-resident. Non-resident. Deduction allowed. Non-resident spouse is also spouse. Mr. X is non-resident. Now, individual. We have not written resident individual is what you are going to be tested in your exam. In this section, they say individual HUF. In some other section of the chapter, they will say resident individual. In this section, they say spouse and children. In some other section, they may say dependent spouse. Let me discuss with you 80D medical insurance. It is self, it is spouse, and dependent children. That means own life as well as medical allowed. Spouse, life as well as medical. Spouse is elder, resident, non-resident, dependent, independent. कैसी भी मतलब as long as it is your spouse, life as well as medical. Children. As long as they are your children, life insurance will be allowed. Whether they are dependent, independent, resident, non-resident. Number of children can no restriction. What are your plans? We'll talk about it. But at least as of now, there is nothing. Medical insurance, you have to divide your children into dependent children and independent children. If children are dependent children, it will be allowed. If the children are independent, not allowed. Now you observe, you all may not have turned 21, most of your foundation students at least. But if you have elder siblings or the graduates or the direct entry students who have turned 21, you check if your family has a floating medical insurance policy where multiple family members are covered in the same policy. The moment you turned 21, you had to exit that policy. At the age of 21, you have to leave your family group medical insurance policy. Because they are assuming that you are now independent. They don't know you are doing CA now. They don't know you are still dependent. It is assumed that you have become independent. At 21, you have to exit because independent children are not covered in medical insurance. Now, here itself, the moment I asked non-resident, you all gave me the wrong answer. Some to got stuck in non-resident spouse also. They are not admitting it. But at least spouse may, I make it very clear. I made it clear, spouse is spouse. As long as it is your spouse. But in the name of the assessee, have we written resident individual? No. That means non-resident is also covered. And this is where you are going to be tested. My questioning is not over. Mr. X is now paying for his children, son and daughter. Will he get? I am right now talking only about life insurance. Medical insurance covers dependent children that we will discuss in medical insurance. Will he get deduction? Both children have grown up. They are adults now. They are married. They have children. Daughter is married and does not stay with him. क्या हुआ? Allowed or not allowed? I want to hear that yes or no loud. Son is also not staying with him. Yes. As long as they are your children. Yes. Deduction will be. किधर है वो? As long as they are your children, deduction will be allowed. Okay, wait. Mr. X is paying life insurance premium of his mother. Mother. Mother is fully dependent on him. Not allowed. अरे माँ माँ हाथों की लकीरें भी बदल जाएगी. Now, still no. गम की ये जंजीरें भी पिघल जाएगी. Now, still no. Mom. हो खुदा पे भी असर. Now, तू दुआओं का है घर. माँ प्यारी माँ मम्मा. Now, अरे she gave you birth, bro. You all face this at least once in life. Every time you are in an argument. Don't teach me. I have given you birth. You have not given me birth. And this happens across the country, across the world. Huh? Still no. Every time you argue, there is a flying chappal. It happens at my age also. Still no. Okay, wait. Wife? Wife allowed. Mom? Who is more important, wife or mom? How do you say that without having any experience? What have you experienced being wife or mom? What? You have experience of being what amongst them? You have experience of being a wife. You have experience of being a mom. On what ground, on what basis are you even trying to answer that question? Who is more important, wife or mom? She's saying mom. You have to tell me between these two, what have you been? You have been mom. How do you know? Huh? Acha, sorry. Suno. With my experience, I tell you that you have to be diplomatic. Okay? Every time you face this question, you have to say you can't compare. They are in the different horizons. One has given you everything, other has left everything for you. You want more knowledge on this? When you are in your hall, no, you scream loudly, say, Mom, you are the boss of this house. You decide whatever you decide is final. Everyone has to listen to you in this house. Say it with power. Then go in the bedroom, lock it, and say, Mom, we told her whatever. You say no, what you want from me. You say what you want me to do for you. You say no. You too play around these things. Otherwise, your life will be a referee. Referee, dekha? Wrestlers are fighting. Then he's like, round 2. Next round. Ting, ting, ting. Your life will be that of a referee. And if you don't learn this diplomacy. if you don't learn this diplomacy, so let's make it clear. I have multiple times told you that you have a lot to learn from me other than tax. I get paid only for tax. Now there's no point screaming early morning that is too less. There's no one to hear that. If someone, if at all, is hearing outside, he'll come and say, Sir, mera bhi kam hai. There's no point. Early morning, there's no point having this discussion. Okay? So, but the fact is that yes, you got to learn a lot from me other than tax as well. We'll announce a separate batch. You can take admission, and best part about that batch will be you just have to come, listen, have a bit fun, go away. There is no homework that you have to do. There is no exam. There is no additional question bank that you are any which you are not doing. You don't have that pressure also. You just have to take some life lessons and go. And believe me, these corporate training seminars are that way crazy. Because when you are catering to students, they will bargain. Secondly, there is responsibility. Third, you have to bring the results. Fourth, after bringing result also, same student is not going to enroll again next year. Maximum inter ka student will come again in final. But final ka student, once batch is over, again next batch, nobody misses teacher so much. Okay, sir, I miss you so much that I am taking admission again after becoming CA. No, itna crazy nobody I have seen. So again, you have to continuously work to make people understand that you are better than the others. Without marketing. Corporate training is must. Kotak Bank will conduct one seminar. If their employees are happy, if the HR is happy, They will invite you every month, every week, at least 3 or 4 times in a year. They'll keep on doing that. And they pay crazy, bro. Crazy. The payment for corporate training seminars is basically 20 times of taking a CA ka inter ka final ka batch. This payment into 20 is the, in comparison with the time taken. That seminar is 1 hour. No one can tolerate more than 1 hour. So 1 hour ka fees, if I take the total batch fees divided by the number of hours I give, so I'll find out how much I have earned per hour. That into 20 is what the corporate training seminars pay. And with no risk, because employees don't have to thereafter go and give exam. If they have any doubt, they will message and we just have to reply. If acted, so we'll keep a separate batch like that, risk-free batch. Admission, UPI का QR कोड चल इधर break में नहीं. You think I am going to forget it in the break now? If you are not paying me in the break, you don't have the break. Fees I have not yet quoted. Now you have to take admission of that batch in the break. Otherwise, I am not letting you go anywhere in the break. हाँ ये अभी देख चैलेंज है. ओके हाँ क्या नहीं. Listen, parents are not covered. Now when we go to medical insurance, hear me out please. In that section they have covered parents. Means you pay life insurance of parents, you won't get deduction. But you pay medical insurance of parents, in that section they are covered. And till now I am only comparing life and medical. As the chapter progresses further, this part that I have written in front of you, section by section will change and make the chapter more and more complicated. In some section it will be only individual. In some section it will be individual HUF. In some section it will be resident individual resident HUF. In 80C, as you see, it is self-spouse children. In 80D, it will be self-spouse dependent children and parents. And they have already written parents. Matlab again, resident, non-resident, dependent, independent, senior, non-senior, any kind of parent as long as your parent. Sir, life insurance not allowed, but medical insurance allowed. There is logic in that. There is logic behind everything written in the income tax law. You just need someone to identify that for you. If you are paying life insurance of your parents, that means basically you want to get your inheritance as early as possible. Pay life insurance and you only are the beneficiary. The parents will die, you will get insurance money. Greedy person, no deduction. But if you pay medical insurance of your parents, that means you are taking care of their health. So we want to encourage that. You understand? There is logic behind everything. But then ultimately for exam purposes, you will have to know that parents are not covered here and covered there. And till now, I am again saying I am only comparing two sections. And I have written in front of you, this section was to written. Still when I asked non-resident, some of you all made a mistake. This is what you are going to be tested on in chapter 6A deduction. You are not going to be tested on give the list of ATC. This is Chartered Accountancy. I have immense respect for anybody pursuing company secretary or CMA, CS, CMA, the other professional courses, the other professional bodies. At least in India commerce, these days students are also being influenced to pursue foreign commerce courses like ACCA, CPA, etc. I am not against you pursuing foreign courses, but please understand the following things. One, the foreign courses are expensive, and expensive is a very small word. One single exam fees is your total cost of becoming CA. That much will be one single exam fees. Second, if you want to settle in that country, so if you are a Malayali from Kerala, you want to settle in the Gulf country, you have to settle in Dubai. So you have to pursue ACCA because ACCA is useful over there. If you have to settle in America, so there is AICP, American Institute of Certified Public Accountant. America ka CA is CPA. You have to settle in America, so you pursue CPA. If you have to stay in India and give bad words to each other in Marathi especially, you have to do CA in commerce. There is no other course. There is no other course. Monopoly power. And there were talks that tax audit, which is our monopoly. Tax audit ka section, you remember 44AB. I hope you do. CA holding COP. There were talks in the new income tax law that will cover CS and CMA also. Very clearly in the new income tax law also, it is only a CA holding certificate of statutory audit. By now, you must have studied your audit ka syllabus. Statutory audit ka power is CA holding certificate of practice. No, section 141 Qualification, disqualification of auditors. Statutory audit not yet done. Company audit. Some are saying done, some are not done. I understand where you come from. It depends on how many people have gone through. These are our monopoly. Matlab, nobody can touch these powers. In India, if you want to stay, you have to do CA. There is no other course. And in fact, supposingly post your professional degree, you still plan to shift abroad. So are you aware that UK ka CMA or that ACCA, if there are 13 papers, so you get exemption in 9 papers after CA ka degree, you have to give only 4 papers. Most foreign courses, Institute of Chartered Accountants of India has got tie-up with Institute of Chartered Accountants of Australia and New Zealand. It has got tie-up with Institute of Chartered Accountants of Singapore. It has tie-up with AICPA. It has tie-up with UK ka ACCA ka body. Every foreign professional course also, with your CA degree, a good number of papers are eliminated from your curriculum. You get clear exemption. Just like your graduates are directly giving intermediate without giving foundation, you have similar facility in those foreign courses also. So in CA ka exam, they are not going to ask a question like give list of investment like life insurance, provident fund, superannuation fund, home loan principal, tuition fees. They are not going to be asked the list. They are going to give a question like this: Mr. X has paid life insurance premium of self, life insurance premium of non-resident wife, life insurance premium of independent mother, life insurance premium of dependent father, life insurance premium of grandchildren, grandparents. You have to identify which one of them covered, which one not covered. The way you were saying no, yes or no, every yes or no will result in marks. That is what is going to be tested in this chapter. You don't have to learn the list by heart. What to do with that list, I am going to discuss everything with you. But are you clear what you are going to be tested on? I wish to still summarize this in front of you. You have to be very clear on this. And I am purposely not writing under 80C because this is not explanation of 80C. Whenever you get a chapter 6 ka question, what bro? Whenever you get a chapter 6 ka question, not just 80C but 80C or 80D or any section, you are going to be tested on the following specifics. You won't be asked give list. They are going to ask you the following things. They are going to test your knowledge on the following things. They will test you on eligible assessing. For example, here we have individual HUF, but there is another section, interest on education loan, which covers only individual. They will say HUF has paid interest of Karta education loan, ya Karta's son's education loan. You have to say not allowed because that section covers only individual. As the chapter progresses, this is going to get more and more complicated. More and more complicated. But this is what they are going to test. Who is the assessee covered in that section? Second, who is the beneficiary covered in that section? Beneficiary means, for example, here it is self, spouse, children. For HUF, it is any member. HUF, wherever it comes, no, it is at least that much. It is good that wherever it comes, it says any member. But in 80D, you have dependent children. So, independent children not covered. In 80D, you have parents. Here, you don't have parents. There is a section in which your brother, sister will also be covered, siblings. But there is no section which will cover your grandparents or grandchildren. There is no section which will cover your father-in-law, mother-in-law. So, who is covered, for whom you can make this payment? You are going to be tested on that. Next, you will be tested on residential status. This is where everyone went wrong here. If this section, the assessee is non-resident, will he get deduction? Yes, because section says individual, and non-resident is also individual. But there will be a section which will say resident, individual, resident, HUF. So you are going to go wrong. I hope you are understanding what is happening. As the chapter progresses, the probability of going wrong, because this is going to get complicated, but this is what you have to focus on. Next, dependence. For example, here spouse, children will be covered whether dependent or independent. 80D spouse will be covered always, but children only if dependent. Parents will be covered whether dependent or independent. In some other section where your brother, sister is covered, siblings, that they have said dependent siblings. So who can be dependent, independent, or both will be covered, that you have to be careful about. And last, in some of the sections, there is higher limit for senior citizen. We have already seen one such case. बैंक इंटरेस्ट का डिडक्शन, नॉर्मल लिमिट इज 10,000 बट सीनियर सिटीजन लिमिट इज 50,000. Likewise 80D में भी सेम रूल है. मेडिकल इंश्योरेंस, नॉर्मल लिमिट इज 25,000 बट फॉर सीनियर सिटीजन द लिमिट इज 50,000. There is a section treatment of diseases, hospital bill. Normal limit is 40,000. Senior citizen limit is 1 lakh. There are a lot of sections which have multiple limits. A section like 80, do you remember, did not have any limit. It was a flat answer. Irrespective of anything, it will be 75 and 25. But most sections have A or B, whichever is lower. But in some of them, it is A or B, whichever is lower. But for senior citizen, it will be A or C, whichever is lower, where C will be greater than B. There will be higher limit for senior citizen. So which section has what monetary limit, that you have to learn. But which of them has higher limit for senior citizen? For example, TTA, TTA. And there's one more thing that you have to be careful about. And this is throughout the chapter. So there won't be any confusion at least. Throughout the chapter, whichever section there is higher limit for senior citizen. Whether it was TTB, whether it is 80D, one thing is clear throughout the income tax law. If we are giving any privilege to senior citizens, it is always going to be only and only if the senior citizen is resident. The moment you see a senior citizen who is non-resident, listen, you will get the deduction. I don't want confusion. You will not get the higher limit. So for example, non-resident senior citizen, so you can't say no deduction. 80 TTA will be given. For example, if medical insurance ka section has two limits, 25,000 and 50,000 for senior citizen, 50,000 is resident senior citizen. If it is non-resident senior citizen, you can't say no deduction. Your answer will be 25,000. You understand? Senior citizen has to be resident for higher limit. If non-resident, to lower limit. Are you clear? These are the points on which your exam question will come. Your exam question won't ask you give 80C ka list. CA students, CS may they do ask. CA may they used to ask 20-25 years ago, which is basically before you were born. I believe nobody is 25 plus years. No? None of us are 25 plus. None of us here are 25 plus. क्या 35 plus है? Me? पागल है क्या? Who told you? If I might have told you in some example, you probably know. If I don't tell anyone, no one will find out. That much credit to you will have to give me. हाँ, तो मित्रों, are we clear? What should be our area of focus in the entire chapter? Now coming back to, and don't write, if at all you are writing this, oh writers, if there is any writer award, no, that full bench will be eligible. Pura ka pura. All four of you. So no, if at all you are writing, you may have already written it, I believe. No? At least don't write it under 80C. Because this was not explanation of 80C. This was explanation of what you will face in the chapter. Okay. Now coming back to 80C. 80C ka deduction will be allowed for individual HUF for making various types of contributions to safeguard your salary, to safeguard your future, family ka future. In case of individual, if you've contributed for self, spouse, children, and in case of HUF, any member. How much deduction you are going to get? For example, if you go and see 80U, there was a flat deduction, irrespective of anything, 75 and 20. If you see 80 TTA, TTB, it was actual or 10 or actual or 50, whichever is low. If you see 80 QQB, it was first a qualifying amount, actual. If percentage, then 15. If forex, then forex brought within time limit. Lowest will be qualifying amount minus your expenses, restricted to 3 lakh rupees. Correct? Eh? So here, in most sections, it is going to be a restricted deduction. It is going to be your actual total contribution. So you realize one thing, that the total contribution will be taken and subjected to the limit. Because there is not one investment here. I told you there are 25, 30 investments. So there is life insurance premium, provident fund, superannuation fund, home loan principal, tuition fees of school, everything put together is your total contribution, which will be restricted to a maximum of rupees 1,50,000 actual contribution or 1,50,000, whichever is lower. For so many years, there were talks of government should increase. Like 2 days before budget and 2 days after budget, everyone is a tax expert in the country. Everyone. All thanks to WhatsApp. Government should really make internet expensive again. People should use internet. Then we really find out that why people are using internet for. These news channels, no 24 hours news channels, they call experts. Some of these experts, they actually pay the news channels for coming and giving an interview. Because ultimately they want to be visible to the public, which can generate some business. Age old proverb, जो दिखता है वो बिकता है. There is this company which sells these snacks called Pappy and Picnic. Pappy, Picnic, chips, snacks, Lays. This company, SM Food Products, was basically the inventor of this proverb because their packets have more air and less chips. So the space which it used to consume in shopkeepers' premises was massive. Shopkeepers were not ready to actually store them. So this company basically offered what to the shopkeeper? That I don't want any rack. You just give me, just hang one nail in the wall and just hang the packets over there. That is how you see all the packets hanging in the shops. Just give me one, they used to say, just give me one killi, one nail. Hang my chips ka packets, and if it will be visible, then people will buy. And that's where they invented this statement, jo dikhta hai wo bikta hai. So they have to be visible. They call these experts. They give their opinions. You often see, actually last 10 years I have been observing experts are saying, 80C ka limit should be increased. And they make such predictions that this time definitely 80C will increase. This time 100% 80C will increase. And in the evening, after the budget, in a very small tone, once again there has been no change in the limits of 80C. And let me tell you very clearly, there won't be any change in these limits now. Because what you are not understanding is, our government no longer wants to give you this benefit. They are forcing you to move to the new regime. New regime basically means all this benefit not available. There is no question of increasing them. Let's be clear. They actually want to abolish the old regime. But if they abolish the old regime, because of which now there is no tax benefit of life and medical insurance, middle class stops taking life and medical insurance in the greed of new regime. No, that is disaster. Because one, the habit of savings and investment will go away. That safety of your family ka concept will get over. Absolutely over. And two, with these premium ka monies, these insurance companies, who is the biggest investor of the equity markets of our country? You think you buy shares with that the equity market is running? That today I purchase shares, so my market is up. Right? Life insurance companies with your premium money make investment in equity markets, mutual fund markets, because they have crazy money. This decides whether market will go up or down. If people stop taking insurance, there won't be money in the equity market. The Indian markets will collapse. Government can't take this blame on themselves. So what are they smartly doing? We are giving both options in the law. In the new income tax bill also they have kept both options. So by chance you move to the new regime, you are responsible. We are trying to make the new regime as attractive as possible so that we gradually phase you out of the old regime. Let it remain. No, I call it Bhangar. Let it remain in the law. We will not touch it at all. Till now, till this financial year, no, 24-25, new regime has got no benefit. Because the gap of 5 lakh and 7 lakh is too less. I'll explain that in tax rates ka chapter. If you want, you can write the amount somewhere. New regime can save, at least in your exam, maximum 1,22,500. The savings that will come in new regime will be 1,22,500. Not a single rupee more than that will be saved in the new regime. Not a single rupee more than that will be saved in the new regime. The saving is going to be 1,22,500, and I will prove this with numbers in the tax calculation chapter, tax rates, the very next chapter. So at least right now, for example, last year I filed my return in the old regime. This year also I will file after March, of course, my return in the old regime. Now for 25-26, the gap has become very big. It's a gap of 5 lakh and 12 lakh, the amount which is being quoted. Whether 12 lakh is relevant only for those who are earning below 12 lakh. If the annual income crosses 12 lakh rupees, there is no substantial benefit. You think I must be crossing 12 lakh in a year? Misconceptions. 1 minute. In case there is confusion, you are getting confused. You are mixing them. I am this. You are thinking it is this. Someone, I wanted to hear this. Thank you. You are both. You nahi. You are not, I know. So for me, there is no real benefit even now. I, for the time being, am skeptical. I am not going to move because there is one more secret which no one is talking about. You know, people talk only what media shows. There is one secret which no one is talking about. You are aware of one-way traffic? To a certain extent, old regime to new regime is one-way traffic. So if you are in new, you can come to old, but only once. Supposingly, this new regime for a moment appears to be very, very attractive, which is happening right now because 12 lakh appears to be a big amount. You go to the new regime, you won't be allowed to come back to the old regime. If I remain in old, 5 years later, 10 years later, when new regime gives me more benefit, today it is 122,500. Next year onwards, with all the amendments that have taken place, which are not applicable to you, but if you want the amount, it is 232,500. These are not substantial amounts. Annual benefit of 2 lakh is monthly benefit of 20,000. Anybody earning crores of rupees has got, this is an immaterial amount. You go and tell Mukesh bhai, you will save 2,32,500 in new regime. Mukesh bhai will say, hey, this is Anand's pocket money. Per minute. Per minute, you earn 2,32,500. After a certain level, this is immaterial. But supposingly, one day the gap becomes 20 lakh and new regime genuinely becomes attractive. From old to new, I can go whenever I want. But if I go there, I can't come back to old. That's a secret which no one is talking about. And I am going to discuss all of these things in your tax rate chapter. We are not approaching this subject only for appearing for exam. If that was the target, we would have completed our syllabus long ago. But the only good news that I would like to give you is we are single digit lectures away from our syllabus completion. It is no longer a double digit. We are about 7, 8 lectures away, 8, 9 lectures. Usme in the next week, there will be a couple of days. I inform you in advance. I'll give you those exact dates very soon where I will be taking double slot. Double slot, you understand? I yesterday only told you do extra data recharge because I know when you keep camera on, the data consumption is higher. So 4 hours break, 4 hours, both slots I will be taking at least 2 days in the next week, with which most probably in the next week or maybe 1 or 2 lecture here and there. But we will finish our portion very soon. Now we are near completion of our syllabus. Only 2 things left: NTTI and tax. NTTI is now getting over. Only tax is left that way. And most of the chapter thereafter, those return filing, etc., are also very, very small. One lecture ka chapters there. Okay, so not a lot of things are remaining, but all these things I will be discussing, and I believe me, I take more time than any other class or teacher, etc., for doing my subject. You can perceive it in 2 ways. Okay, one, sir, I am gaining knowledge. Wow, I like it. And I always believe in giving more than. what I am getting. I think of what I am giving first before I am thinking of what I am getting. If I start thinking that, yeah, what am I getting by taking this batch, I won't be able to have this discussion. Then the target will be syllabus completion. But my primary thinking is, if I give you more and more and more and more and more, so somewhere in your articleship, somewhere in your job, there has to be a situation where, in this era of influencers, where everything is dependent and decided on the basis of what influencers go and tell people. I do not have any intention of paying any influencer to influence students to take admission with me. I want you only to be that influencer with your knowledge, your presence of mind, and the way you talk to people about taxation is that turns as an influence. Education becomes the influence, is basically my target. I am not against content creators. I don't have a problem. My problem is that without adequate knowledge, only because they are getting paid for a certain thing, they are diverting people from one place to another, not realizing that they end up ruining the careers of a lot of people only because they got paid for influencing people. That is my objection. You make a career of whatever you want to. There are people, there is this YouTuber, there is this social media guy called Hindustani Bhav. All Hindustani Bhav, Google his name. All he does is he sits in his car and he gives bad words, continuous bad words, abuses in Hindi, in Marathi, non-stop, 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 and he has millions of followers. His choice. He is being abusive. His choice. You watch him. His choice. But at least you are not taking career decisions on him. He's that way, he is ethical also. You may decide to make that your career, that's your choice again. But at least he has that much ethics that he does not influence you. He is making money. Make money, no problem. But don't influence people to take career decisions. No problem. Understand what is happening. So, ladies and gentlemen, there is no scope of now any increment because government has decided that they want to abolish the old regime. So, moving forward, you may not, you may see a time where there are no deductions only. At least in the new income tax bill, still they have kept these deductions because they have retained the old regime in the new income tax law. If the old regime is so bad, then why don't you abolish it? If new regime is so attractive, then why do you want two ways of calculation of tax? And I one more time say it and I repeat it, dear students, that if auntie abolishes the old regime, only abolishing old regime could have automatically reduced the income tax law by 30%, more than 30%. Because most of these, see, deductions ka chapter not to be done only. Special economic zone not applicable. The big deductions of PGBP, scientific research wala, big section. 35 AD, big section. Depreciation is allowed, but additional extra depreciation not allowed. Most of the big sections of income tax law will not be allowed only in the new regime. In any case, your syllabus or your total income tax law content becomes 20-30% less. If genuinely it is so good, the new regime, then why have you kept the old regime? Because government does not want the blame on themselves. So they are retaining the options. If by chance you go to the new regime, because they are making it look attractive, you are going to be responsible. So at least there is no question of increasing. So let's be clear. Your life insurance won't be restricted to 1,50,000. Your life insurance, your provident fund, your superannuation, your children ka tuition fees of school, your home loan principal, your mutual fund investment, lots and lots of investment. I will be discussing the list with you. Take that total. Supposingly in that there is parents, so you don't have to take it because disqualified. Grandparents, grandchildren, you don't have to take it. Disqualified. The eligible amounts ka take total, and that total you compare with 1,50,000, whichever is lower. If my total contribution is 2 lakh, my deduction will be 1,50,000. If my total contribution is 1 lakh, my deduction will be 1 lakh. Is that clear? As surprising as it may be for you, but yes, ladies and gentlemen, your cash is going to be allowed. Surprising but true, cash is allowed because you got to understand what are the people whom we are targeting. Our target is middle class, lower middle class, even lower than lower middle class. They are the ones whom we want to encourage for savings and investment. We have to allow cash. Of course, in the era of UPI, etc., you can remove this if you want. Last 4 or 5 years में UPI has become popular, especially post COVID, post demonetization, digitalization. Only Paytm wallets etc. were there, but ये UPI, QR code etc. last 4 or 5 years post COVID have become crazy now. Payments have become so easy, and India's digital payment system is most advanced in the world, which we have to accept irrespective of our political inclination. We have to give credit to this government at least for making India so advanced that developed countries, the leaders are actually taking lessons of how actually you did it. So, once upon a time, it was not like this. Only 3, 4, 5 years ago, it was not like this. The lower class, the middle class did not understand the concept of banking. Their whole career was cash-based. And we can't force you to make check payments in this. One thing you must understand, life insurance is for lower class. Medical insurance is privileged class. Please understand that also. Because when I do medical insurance, it is clearly written that it should be other than cash. Cash will be disallowed in medical insurance. Why, sir? Because if the poor person is unwell, he will go and take treatment in government hospital. You are taking medical insurance because you want to cover up your expensive private hospital cost. You are privileged category. Middle class, lower class thinks medical insurance is a waste of money. But life insurance everyone needs because everyone dies. Who are you, Ashwathama? You know Ashwathama has not died. So you are not Ashwathama. Everyone dies. Everyone needs life insurance. There is this guy who repairs my bike, two-wheeler, Activa. These guys have a habit that they always want to make you wait. Multiple times I have told him, and abhi kya in WhatsApp era, no, you have each other's number saved, so you can see each other's story. So by now he knows my profession also because of WhatsApp stories. Earlier he used to call me Seth. Now he calls me sir because he knows my profession. I instructed him very clearly that never make me wait. My time is very precious. When it is fully ready, then only call me. In fact, now the things have become so easy. I tell him that this is the parking place in my building. Put the vehicle over there. I have the spare key. You keep one key with you. I will collect it whenever I want and I will make your payment online. So I don't need interaction also with him to collect my vehicle. But as out of habit, he'll call me, sir, ready, come. I confirm ready, confirm ready. And when I reach, sir, 5 minutes. Habit. So he was fixing the tire. Then suddenly I see there is this one guy coming with that machine, bus ticket kind of machine, the parking slip kind of machine in which you enter some figures and one slip comes out. Or the moment you swipe your credit card, how a slip comes out. There is this one guy, that machine hanging in his neck. He comes, this guy who is repairing my bike, he pays that guy 100 rupees and gets one slip. I was anxious. I have this anxiety to learn wherever I go. I am sitting idle for 5 minutes waiting for my bike work to get completed, but I still wanted to know, why have you paid 100 rupees and what is this slip that you got? He said, sir, this is my life insurance premium. I pay 100 rupees every day. He gives me this slip. End of the month, he gives me proper receipt of the full month premium. And end of the year, I get my premium certificate. Sir, I cannot afford 30,000-40,000 rupees premium together. But I can afford 100 rupees every day. So I pay 100 rupees every day. Every day I have collection of 4,000-5,000 rupees. 100 rupees, is negligible. I can manage. And by the end of the year, understand how middle class developed saving habit because of life insurance ka tax benefit. Every day I am paying 100 rupees in cash. I get this slip and end of the month I get my proper receipt. Now, yes, there is UPI. But 5 years ago, there was no such thing. You had to allow cash because of the category to which we are catering. I could have kept it simple by saying cash allowed. Chalo, let's go to the next point. Life insurance, it is allowed. But there is logic behind everything. Now you know why life insurance allows cash, because that way income tax law all throughout has been very, very strict and particular with us, clearly mentioning other than cash, only 3 allowed modes, 3 allowed modes. Most of the places they have said 3 allowed modes, because they want to curb cash in the economy. But there is some logic behind allowing this. Next, you have to make payment till 31st March. You have to make payment till 31st March. If you make payment after 31st March, you will be disqualified. Sir, somewhere in our PGBP chapter, I don't want to take the risk of asking you the question and disappointing myself early in the morning. So I would like to tell you, if this is your previous year, there are some expenses that you have not paid till this date, but after the due date, before John, if you make payment, you get deduction. Huh? 43B. That means, is it okay to make payment after year end, but before due date of return filing? This facility is not allowed in ETC. You make payment till 31st March, you will get deduction in this year. You make payment on 1st April, you will get deduction in the next year. The deduction will be on payment basis. You don't get any extension, etc. Is that clear? Next, very important. The payment can be out of any money. See, as an expense related deduction, their main target is to make you spend money. Supposingly, you have income from salary. Now, do you remember salary is due or received, whichever is due? So 6 lakh ka salary is due, but you have not collected that salary from your boss. You want to keep it safe. Bola, sir, next year I will need funds. Keep it with me. Is that 6 lakh still taxable? Yes. Why, sir? Due or received, whichever is due. But you don't have cash. Now, how to save tax against that 6 lakh? You take a loan and pay life insurance premium with the loan money. So your gross total income is 6 lakh, which is your salary. But the cash in hand is not this salary. The premium you have not paid from this money. Premium you have paid from some other money, from some loan taken. You still will get your deduction. As long as you pay your money, it is not compulsory to use this money. You can use any money. Payment is important. From where you are making payment is not important. You understand this? So payment can be made out of any money, but payment has to be made up to 31st of March, and cash payment is also going to be permitted. And last, basically the list of investments. As I clearly told you, this is not what you will be tested on. You are going to be tested on this part. Correct? Hai? So you don't have to memorize the list by heart. What you have to do is read all from the textbook and learn the ones which I am making you mark now. Learn the ones which you have marked. Read all, learn the ones which are marked. The important ones which are asked very frequently in exam, I am going to discuss them with you. I am going to make you mark those important ones. Hello. Hello. Oh, page number I will tell you first. Listen to me though. Important ones I will make you mark. You have to learn them. But for your safety, you have to go through the list. 1, 2, 3, 4 readings are good enough. You just have to be saying yes, allowed, or no, not. Let us see what are the payments which are covered under section 80C, at least the ones which we have to learn. 80C is on page number 174. Page number 174. Everyone is with me? Deduction in respect of certain contributions subject to a maximum of rupees 1,50,000. So of course, are we aware that there is a limit? 1,50,000? Fantastic. This is where the list starts, the list of contributions which are going to be allowed. The first, the most important, something which is the identity of ATC. Outside this classroom, there are a lot of people who feel life insurance is ATC, ATC is life insurance. Not true, sir. Life insurance premium is just one of the various contributions here. But the most important of all, yes, ladies and gentlemen, life insurance premium will be allowed as a deduction. And as already discussed, in case of individual, self, spouse, children, in case of HUF, any member. But there are some conditions here. For any policy that was taken up to 31st March 2012, the deduction is going to be 20% of your sum assured. Sum assured is policy value. For any policy taken on or after 1st April 2012, the deduction is going to be 10% of your sum assured. And for any policy taken on or after 1st April 2013, in respect of any person who is disabled or handicapped, the deduction will change to 15%. So up to 11-12 for everyone it is 20. In 12-13 for everyone it is 10. From 13-14, normal people are still in 10, but disabled are in 15. Sir, you are doing it so fast, sir. You are not explaining also. Salary में क्या nonsense you speak. In exempt income, when my life insurance policy matures, death case is always exempt. Maturity case is exempt if you stay within your limits. And these are the same limits. Means if my premium is within this limit, I will get deduction of the premium up to this limit, and my maturity will also be exempt. But if my premium crosses the limit, let's be clear. Let's be clear about one thing at least. Even if I pay more than this premium, no, this 20% or 10% or 15%, I will still get deduction up to this much. Supposingly 1 lakh ka policy. You are in 20%. The limit is 20,000. You pay 22,000. That is more than the limit. But you will get deduction of 20. Excess will be deductible. But maturity will be taxable because you crossed your limit. Correct? So the same limit which are available for exemption of your maturity proceeds are also the limits of your premium deduction. Same years, 11, 12, 12, 13, 13, 14, handicap, everything same, 20, 10 and 15. But I have a very important doubt, sir. Sir, these premiums are having percentage limit forever, 20, 10 and 15 for maturity to be exempt. Recently, they also introduced rupees limit. The premium is within the limit as far as percentage is concerned, but more than the limit as far as rupees, 5 lakh. If the premium is more than rupees 5 lakh, even if it is within 20, 10 or 15, if it is more than 5 lakh, then your maturity will be taxable. But they are not talking about the rupees limit at all. Premium kai, their limit was on premium only. Are they retaining the 20, 10 and 15% wala limit? Yes. But there they also have limit of 5 lakh in rupees. Here they are not giving any such limit. Why? Bro, full section ka limit is only 1,50,000. Where is the question of giving 5 lakh ka limit separately here? Not just this premium, but everything else ka total will be restricted to 1,50,000. Why do we need it? Obviously, the rupee limit ka amendment was not required. Understood? So, rupee limit applies only in maturity ka exemption. I think there are some people who are confused here about, sir, ye 20, 10, 15 kya hai, that 20, 10, 15 kya hai. You are in some own wonder world. We pay premium and take deduction of 80C. Now we are policy holders. Now we are going to get money from the policy. Death cases, nominee will get money, that will always remain exempt. Maturity cases, you yourself will get money. That will be exempt if it is within the limit. So there is, when you pay premium, at that time also there is limit for deduction. And when you receive maturity, that exemption will also depend on whether it was within limit or no. That section was exemption of maturity. And this is exemption deduction of the premium that you are paying. You understand the difference now? Okay. Next. Provident fund covered under the Provident Fund Act. We call it statutory provident fund. Government employees take birth to enjoy life. SPF. Any contribution to SPF, own contribution, allowed deduction. Any contribution to PPF, allowed deduction. Any contribution to RPF, allowed deduction. There were 4 types of provident funds. Out of 4, there was only one which was not eligible. Unrecognized provident fund. The remaining 3 were eligible. In PPF, we say own contribution because there is no employer, and in the others, we say employee contribution. Eligible, no? We wrote ATC deduction, ATC deduction. Now, well, ATC is in front of you. Unrecognized, not covered. The remaining 3 will be covered. Now, after today, if you open salary chapter again, which you any which way have to because you've not opened only, so you will be able to relate to that provident fund table and deduction. Big problem with taxation is in the beginning, you don't know a lot of things which are going to come later and they are related. For example, provident fund table is related to this. So at that time, you don't know this. There is confusion. Now, by the time we reach this, you forget that. Again, there is confusion. Which is why I always tell students that you should always attend a tax batch twice. Take admission twice. So what will happen is, now we have completed this, and now if you attend the second batch and you are attending that provident fund ka table, so in that if I write ATC now, you will be able to understand, okay, ATC is chapter 6F, which is available again GTI. So you can enroll for the next batch. March I am starting. By mid of April it will get over. Offline, online, recorded, all 3 options available. He is looking at me like this. Bro, what is wrong with you? It is not compulsory to take admission. Don't take, bro. You never know. You'll take admission and what all you'll expect from me. But there is one more limitation. You CA students, today you do deductions. I am telling you, join the next batch. So in salary, you will understand provident fund. But at that provident fund, again, you will forget deductions also. That cycle is never ending. What came first, hen or egg? Go. So bro, just forget it. Go by the flow. Take life one day at a time, 1 minute at a time. We'll see what to do tomorrow. For now, I am just now telling you, not expecting anything, that out of 4 provident funds, 3 are eligible for ATC. The only one which was not eligible, always not eligible, was unrecognized provident fund. Immediately after provident fund, we also had superannuation fund. That was also for safeguarding your future. Employee contribution was covered under ATC for that also. Next is any securities issued by central government. Central government is very smart. They know that you all have savings, but they want that money. They are like, what are you going to do with your savings? So time and again, central government keeps on coming and announcing, एक latest scheme है. We have one scheme. मेरे पास एक scheme है. एक scheme है. हाँ, Lakshmi Chit Fund. Central government keeps on bringing some schemes. What to do? Your money you will contribute in that scheme as an investor, and they will give you return on investment. Now, the bonds that central government issues, the rate of interest is ridiculously low. Nobody is interested. So, how to make central government schemes interesting? The moment you make investment in that central government scheme, it is an investment. Money is going to come back with interest. But your investment will bring tax benefit. Any security of the central government that you buy, any deposit scheme, lots and lots of deposit scheme. Once upon a time, government announced a scheme called NSS, National Savings Scheme. They announced a scheme called NDS, National Deposit Scheme. Lots and lots. It is not one scheme. It can be any scheme. But for example purposes, I have certainly mentioned one scheme over here. Modi ji, when he became Prime Minister, he announced, this is brainchild of Modi ji, he announced a scheme called Sukanya Samriddhi Scheme for the benefit of the girl child. If I have to tell you in brief what this scheme is, anybody who has a girl child under the age of 10 can be a subscriber to this scheme. You have to pay every month 1,000 rupees. What is your monthly investment? 1,000. So what's your annual investment? 12,000. This you will do for 14 years. 12 into 14, 1,68,000 is your total investment. Total. That also 1,000 ka amounts. 14 years. 168 you have invested. Now stop. There will be a lock-in period of 7 years from year 14 to year 21. You won't have to give anything. You won't get anything. 168 is with them. At the end of 21 years from the beginning, 14 plus 7, you will get some 5-6 lakh rupees ka corpus. Good. Somebody with budget of 1,000 will get 5-6 lakh rupees after 21 years. And this is where most governments no fool around. Right now we have to take 1,000 rupees. Right now we don't have to give. 21 years later, when the time will come to give, I don't have to give. No new prime minister will give. Most governments in the past have done this nonsense. That take some foreign loan of 1 lakh crore, repayable after 20 years. The prime minister, the chief minister very smartly take those loans, knowing that we don't have to repay. Repayment ke time tak 20 years, nobody is going to remain PMC. These are all temporary posts. Tenure is 5 years. No matter how popular you are, maybe second time, third time. India has never seen fourth term of prime minister except Jawaharlal Nehru, because there was no one else. Jawaharlal Nehru, sir, he left prime minister ka post only because he died. From 1947 to 1964, he was the prime minister and he vacated the post upon death only. But there has not been any other leader he has been the longest serving prime minister of the country. Modi ji is near breaking of that record. He has to be careful for the next 5 years because he is not in majority right now. Mela Babu, Mela Sona. Which Babu? Chandra Babu, Nitish Babu. He has to please them on a regular basis. So basically, government right now is taking money from you. After 21 years, they will repay. Whichever is the new government, they will repay. Now, supposingly someone has budget of 10,000 per month. So annual contribution will be 120. 14 years the contribution will be 16,80,000. You will get 50-60 lakh rupees at the end of 21 years. Now at the end of 21 years, see, when you started, your girl child was under 10, 5-6 years. So at the end of 21 years, the girl child will be 25-26 years. You want to use that for further studies, higher education, use it for that. Slightly unfortunate, but most places in our country, even now, the entire wedding expenditure is purposely imposed on the girl's family. Of late, modern families have still become good that, for example, in our culture, the wedding expense is divided 50-50 between the boys' side and the girls' side. Half. Or there is one more innovative idea found by families these days. Both sides will conduct one function as per that budget. So girls' side ka function, they will invite only their guests. We will go limited family members. Whatever number of members they say, that many people will go. And if we want to do anything grand, for example, the boys' side, so we will keep as per our budget. We will invite our guest list and invite family members of the girls' side. So both of you all conduct one function of your own budget. Or both of you all have more or less the same budget, then conduct a joint function and do 50-50. But then most places, urban areas also, we do not blame the rural or the semi-rural areas, but the urban areas also, the full wedding ka expense is a responsibility of the girl child ka family. So government somewhere knows this. Modi ji is aware of this. Modi ji knows that no matter how much gender determination is a crime or you will get arrested, but sonography machines ka purchase and anybody can afford. And most of these radiologist sonography clinics, they determine the gender and inform. And India has seen female feticide, you understand? Kill the girl child before taking birth by determining the gender. Which is why also the male-female ratio has, there are roughly less than 900 females per 1,000 males. वो male-female ratio statistics में you must have somewhere come across. Bro, this is a big reason why a lot of males are changing their preferences also. I am just saying hi. I am not. Modi ji knows that I can't stop this altogether because I can't go everywhere. Instead of criminalizing it, let's find an innovative way that girl child itself becomes a motivation. So if you expect 50-60 lakh rupees at the end of 21 years, that is enough motivation to raise the girl child proper. And he invented this scheme called Sukanya Samriddhi, like various schemes. Then National Deposit Scheme, National Saving, various schemes. This is only an example if you clearly observe. Sukanya Samriddhi is an example. Now what is happening? You are subscribing to that scheme, by paying 1,000, 10,000 as per your budget, you will get 80C deduction for investment. Later what will happen? You are going to earn interest, and one day you will get that maturity after 21 years. Everything is going to be exempt, section 10. So contribution will bring 80C, and interest and maturity will be fully exempt. To a certain extent, it is similar to PPF, except that PPF anybody can take. This only if you have a dependent girl child. Anybody cannot take Sukanya Samriddhi Scheme. But a beautiful investment if you have a girl child. The Sukanya Samriddhi Scheme. So any kind of central government securities you are investing, you are going to be eligible. If you are investing in saving certificate of central government, here if you want example, in our country there is a certificate called NSC, National Saving Certificate. Others are also there. There is Kisan Vikas Patra, Indira Vikas Patra. Ultimately, what are all of them? They are only investments. You keep your money in FD, that is your choice, or you buy these bonds, securities, equity, mutual fund, gold, whatever you want to buy. If you buy this, government will be able to use your money till maturity. Because money is lying with government, government is getting your money to use. They don't mind giving you tax benefit of the same. But very rarely you will find people subscribing to all this, at least for tax benefit, because most people finish their 1,50,000 ka limit within life insurance and home loan and etc. They rarely have anything left. Bro, if you purchase a new house and you pay stamp duty, no, that is also covered in this. Because stamp duty in Maharashtra is 6%. So 1 crore ka bhi house you buy to 6 lakh rupees stamp duty. The other payments that you have made no use actually. Which is why we always thought that 80C should increase, but now knowing the government ka intention, 80C ka limit is not. So on this first page, we have marked 1, 4, 5, 6, 7, 8, 9. Everyone is with me? I am telling you to learn with the ones which are marked. Next, point number 13. Any subscription to units of mutual fund. Subscription to units of mutual fund. So bro, what do you know about mutual fund except the fact that they are subject to market risk? We have discussed in capital gain chapter. They take your money and invest in the market. People refrain from going to equity markets directly because of risk factor. But mutual funds play a safer role. They will take your money and diversify. So people still have the willingness to invest in mutual fund units instead of directly buying equity. But believe me, buying mutual fund units is nothing less than buying equity. At least markets will get your money. You will buy units and those funds will invest in market only. You remember the mutual fund ka diagram we had made? You invest, they invest, market gives return and they pass it on to the unit holder. And government has realized that people are not going to take equity markets very easily because Indian culture, Indian family culture somewhere is always going to remain averse to not very keen or fond of equity markets. Indian middle class beliefs have somewhere, contributed to this. There was once upon a time where I had extremely good relation with my mother's brothers. So I was in his house some years ago. I was checking my demat. And when I checked that with one of my other cousins, I discussed, today our Hero Motocorp is down today. Reliance is down, right time to buy. And can you guess his reaction? तू शेयर मार्केट करता है? शेयर मार्केट, शेयर मार्केट, शेयर मार्केट. I am working for 12 hours per day and with that money I am investing. I am not taking your money. By the way, you are not even giving me that money which legally belongs to me because your mom was my mom's mom also. So whatever she has left behind, the portion belongs to me also. I am not even fighting. We just left everything and left from there. Keep it. Keep everything. We don't want anything. In the grace of God, we'll do whatever we have to. I am not even fighting for that. This is not your money. Uda can't even say that. Who the hell are you? But that is typically the reaction of Indian parents, middle class families. As far as equity markets are concerned, they consider it nothing less than betting and gambling. So government knows it won't be easy to bring people to equity directly. Indirectly, how can we bring? You buy units which are risky, but the risk factor is less than equity because they will diversify, they will invest in multiple companies. Correct? Eh? But the moment you buy mutual fund units, somewhere you are contributing to the equity markets. And if the corporate world will get your money directly or through mutual fund, somewhere that is what will contribute to growth rate, employment generation, tax revenue, GDP, because corporates need money to do business. Without money, they won't be able to do business. And your money is lying at home. So they are putting your money to use also and making the profits and giving you. If you have the risk, if you have the fear factor as far as equity is concerned, then no problem, Mitro, invest in mutual fund. Believe me, we have state sponsored ads, mutual fund sahi hai, mutual fund sahi hai, because our government wants us to invest in them. This will bring markets, this will bring money from small households to the markets and which will contribute to all those macroeconomic factors. Is the logic behind giving this deduction. So if you buy any specified mutual fund units, you are going to be eligible. If you contribute money in a pension fund, if you contribute money in a what, bro? Pension fund which is set up by a mutual fund company. Pension fund which is set up by a mutual fund company. Sir, what is this? What do you mean by this? Okay, everyone is with me? Listen. If you are a government employee, you will get pension. But if you are non-government employee, you think you will get pension no matter how cute you are? I'm asking you, will you get pension? No. But you also want pension. You also want to safeguard your future. So there are companies who are in this business. As per IRDA guidelines, they are allowed to sell you a product. Sir, what is the product? Listen to the product. Huh? Listen to this offer given by a company to you. That you have to contribute every year a certain amount to my company. So during your work life, you put money and the corpus will be created. The day you retire, from that, every year we give. Right now, you give us money. After your retirement, every year, we will give you money. You are creating your own pension by contributing in that fund during your work life. Because you won't get pension. No, you're not government employee. So for your pension, you are creating this fund, pension fund of mutual fund company. Mutual fund companies are allowed to run this business. And similar business in our country is run by insurance companies. You know, a lot of insurance agents will come with insurance agents. Kiska tha? Somebody had insurance agent. No, estate agent. Insurance agents will come with innovative products to you. They will say that every year you pay this much, and after retirement, you will get fixed income plan. You hear something called fixed income plan? After retirement, every year you will get 3 lakh rupees till you are alive. That is basically you creating your own pension. So you can subscribe to the fund of mutual fund company or you can subscribe to the fund of insurance company. Everyone listen to me carefully. Mutual fund companies ka pension fund is covered here. Can you see that? Pension fund of mutual fund company. If I have to finish the next section 80CCC in one line, so we are still in 80C. 80C is still not over and still it will take a lot of time. But before that, I am completing 80CCC with you in one line. Contribution to pension fund of insurance companies. Once you understand the meaning of pension fund, you put. That's your fund. After retirement, you get. Two types of companies are allowed to run this business. Mutual fund company, insurance company. If you contribute to mutual fund company, so 80C. And if you contribute to insurance company, 80CCC. In one line, 80CCC gets over. Contribution to pension fund of insurance company. क्या पागल लोग है क्या नहीं? You just imagine Are they not silly? Are they not stupid? Instead of doing so much complication, all you could have done is where they have written contribution to any pension fund of mutual fund, they could have said oblique insurance company and finished of the matter here itself. Here only they could have said or insurance company. But they have wasted a full section in doing this time pass. This was not required. Separate section. But in one line, 80CCC gets over here itself. What is 80CCC? Contribution to pension fund of insurance company. Everyone is clear? So yes, on this page we have marked 13, 14. Now there is a slight printing error here. After 15 you see 16A and B, and after 16A and B, 17 is wrongly printed as 2. So that's point number 17, which you have to mark also. So after 13 and 14, we are marking 17. 17. Any tuition fees is educating your children, safeguarding your family's future. So we will give you deduction of their fees. But wait, there are certain things that you have to be careful about. We are talking only about coaching fees. Any payment towards development, donation, etc. is not going to be allowed. Believe me, ladies and gentlemen, our area, especially South Mumbai, has got acute shortage of good schools. School admissions are a big pain. No matter how influential, educated, etc. you are always living in a dilemma whether my child will get admission in the correct school. The school which my son goes to is now Bollywood and politicians, they all send their school to Dhirubhai, they send their children to Dhirubhai Ambani International School. You know, Dhirubhai Ambani International School ka annual concert took place. Chief guest was Karan Johar. Arey, campus placement hai na, he has to pick up people from there only as actors. All Bollywood kids go over there. All industrialist ka kids go over there. Dhirubhai Ambani International School ka there is anthem. Every school has anthem, no? Written by the lyricist Javed Akhtar. They are a different level. But then this school is a new school comparatively. Once upon a time, this school was not there. All Bollywood parents, all big politicians, all the big politicians of Maharashtra, their children have studied in the same school in which my son goes. Bollywood mein Kareena Kapoor, Ranbir Kapoor, Ayan Mukherjee, all of them have studied in that school. Once upon a time, that was the only good school considered. That school ka, if you want admission, the rate going on in the market is roughly 20 to 25 lakh rupees. Only for admission. They call it donation. It is not donation, it's a bribe. 25 lakh rupees. You think I have 25 lakh rupees to give admission of? Please let me complete. You think I have 25 lakhs to give to school for admission purposes? I have 25 lakh rupees. Not for that purpose. When we were struggling for school admission, not real struggle, matlab we were a little scared whether we will get the school of our choice or not. I had clearly told my wife, our child will go and study in municipal corporation school. If we don't get admission, I am not going to pay a single rupee bribe for school admission. And it is not about you don't pay, I will pay, I don't show me your funds and don't show me that. I will not let, see, India has already a lot of corruption. Every time a traffic constable stops us, we indulge in some kind of corruption. Education is the last place where I as a teacher want corruption to enter. There shouldn't be any corruption in education. Otherwise, somewhere paying the influencers and then diverting crowd to your classes, is it not a kind of corruption in education? Education is the last thing. No, I am not going to tolerate. We will just fill up the forms, let the school decide as per policy. Not all seats are for donation. There will be some seats on merit. If our child is deserving, child will get. There is a big question here. Child going to junior KG. If not in the mood, will start crying in the interview. So how do you decide what is the basis? We didn't do anything. We filled the form. And some days later, we got the email that your child has been admitted without a single rupee of donation. A big confusion. What is the factor? What have I done? Why should my child get admitted like that in a school which has to take 20-25 lakh rupees only for donation? And there are agents, there are middlemen who tell you that don't worry, I will get the admission done for you, I will secure it for you. How? After a lot of thinking, I realized all I did was fill the Admission form. Admission form took detail. Child का क्या detail? 4-year-old at that time. What details will give you? Child का date of birth, Aadhaar card. Ultimately, they take details of parents, their educational qualification, their profession. And when both parents are, and this school has a policy, most parents, you'll see both parents are educated. Professional. Like we have parents who are both mother, father, both are doctors, both are chartered accountants, or one is CA, one is MBA. We are both chartered accountants. I don't think there was any other reason for that school to give my son admission. You know, I've saved 25 lakh rupees. If you think that, sir, CA करके क्या ही मिल रहा है, and etc. These statements you will hear from those people who give exam only for passing. Sir, that we are struggling for a job because you don't know anything, no gada. You pass your exam by getting those 40 marks. Aggregate in some other subject. One subject you are good, you cover your aggregate. You have zero knowledge. So you are going to struggle even after becoming CA. You don't understand the process only then. But still, I saved 25. Such kind of donations, if paid, are not going to be eligible for deduction. We are only talking about tuition fees. In tuition fees also, I'll tell you one more thing. When we take school admission of our children, in that the admission fees has got breakup. You know, tuition fees, bus fees, iCard fees, contribution to breakage fund or anything. If you're, you know, they maintain a fund that if any damage is made in the school property, so for that they can have another separate fund. Only the teaching component, your library fees or bus fees or etc. is not eligible. They are very clear about this. The tuition fees component is going to be eligible. So yes, school education will be covered. Observe the other conditions. It has to be university, college, school or any other educational institution. Means, listen, private coaching fees, you should not be paying for your children, right? Kya? No, you have to pay. Bring more people. Oh bro, be my influencer. You can pay, you won't get tax benefit for tuition. This tuition is your basically school, college fees. Private coaching, private tuition fees will not be covered here. Tuition classes can no tax benefit. Second condition, be careful about this. The institution has to be in India. So true or false, you're not allowed to send your children for foreign education. You can, but you won't get deduction. And full-time education of any two children for those who were asking. That year they have put the limit. Any two children. So Akash, true or false, Akash? You are allowed to have only two children, Akash. False. Good. He is becoming a pro day by day. You are allowed to have how many? As many. But educate only two of them. Educate all of them? Good. Deduction will be only for what happened? You want how many? You yourself are child, bro. Deduction will be for how many? Only two. Is that clear? So notice, one, only tuition fees, other components not allowed. Second, recognized college, university, school, not private coaching. Third, in India. And fourth, maximum two children ka deduction. You don't have to take first two children, you can take any two children where the fees is highest. So supposingly there is a third child, you don't have to take it only. Ignore that amount. Take any two children, take life insurance, take your superannuation, take your provident fund, and that total will be restricted to 1,50,000. Is that clear? Next, point 18, while you have to mark it, you observe the size of point 18. Point 18 has parts A, B, C. Can you observe? On the next page, if you see, C is subdivided into 1, 2, 3, 4, 5, 6, 7, 8, 9. Hello? That 9 has further subpoints 1 and 2. And then there is a point D also. Do you understand? A, B, C. C has 9 points. 9 has 2 points. And then there is D also. Yes, I have told you read everything. But if you want me to make it simple and easy for you, let me be clear about the following things. Let me summarize point 18 for you in short. This deduction is for your home loan principal. This deduction is for your home loan principal. Why is interest not allowed as a deduction? Because interest is already covered under house property. So this is only home loan principal. That also only and only if the property ka construction is completed. So incomplete property mein you won't get any deduction. Under house property, for interest, we still have pre-construction interest ka facility. Hello? But here we don't. Only if the construction is completed, only if the property is ready. Because of which, if you see these days, a lot of developers announce their projects, no? They take part payment, like 5% payment they take from you. And the rest is bank finance. And in their advertisement, they clearly write that there won't be any EMI till completion. Next time you see any developer ka plan, any developer ka newspaper advertisement for loans, etc., these developers are so smart, their loan ka thing also they will do for you. Buy their property, and if you don't have money, you want to take loan, so we will arrange. The banking people also are sitting in their sales office. You just have to give your income tax records to them. They will not start your EMI till completion because that is not eligible for tax benefit. And the third thing that you have to be careful about, the loan has to be taken from approved person. If you learn this much, no, this will work as a summary of your point 18. See, now if you ask me, sir, what is approved person, sir, what is approved person, so then sir, go and learn the list. You can take loan from central government, state government, bank, life insurance corporation, national housing bank. Either you learn the list. If you want to have the detailed knowledge, then learn the list. Otherwise, to keep it simple for you so that you don't have too much to memorize, because already you have lots and lots to memorize. So I am keeping it simple for you. That supposingly you are staying in a rented house, and now because it's a rented house, you have to vacate because the owner wants to sell. The neighbor's wife is telling you that please don't go. Please don't go. But I don't have funds to buy the house. She's like, no problem. I will give you the loan. You can repay in cash or kind. Kind? Cash or kind. She is giving both options. Are you allowed to take loan from your neighbor's wife? You are. But that won't be covered here for tax benefit. So, only principal, because interest goes in house property. Only completed construction and only from approved persons. Are you clear? So, this will summarize your point 18. Because if you observe, lots and lots of things are given here. Okay. Other clarity I want to give, that when you buy a house, you have to pay your stamp duty, registration fees and all that also. That will be eligible. I just told you some time back orally that when you buy a house, Maharashtra charges 6% stamp duty. That itself will exhaust your 1,50,000 at least in that year. Correct? Eh? That will be covered. However, it shall not cover what? Admission fee, cost of share, initial deposit or furniture ka cost. Every time you buy a property, general knowledge I am giving you. Show off nahi, but I have told you that recently I happened to purchase 2 properties. So, barabar hai. With that experience, I am sharing this with you. That the moment you become the new owner, one, for registration of property in your name, you have to pay stamp duty. 2, now the housing society in which your property is located, you want to transfer the share certificate, no, in your name. The housing society charges a certain amount as transfer fees from the outgoing member and the incoming member. They call it what? Transfer fees. In Maharashtra, there is a maximum cap on this transfer fees. That cap is 25,000. That societies cannot charge more than 25,000. So societies charge, all societies charge 25,000. You got the point here? The maximum allowed is 25 and therefore societies charge. No one charges 24 in Maharashtra. Likewise, if we talk about registration fees, along with stamp duty, no, you have to pay something called registration fees. In Maharashtra, there is a cap of 30,000. So in all the properties, we pay 6% stamp duty and 30,000 registration fees. For example, the office which I purchased, the payment was 75 lakh. Check wala part. 75 lakh rupees. So on that 75 lakh rupees, they charged 6%. Plus 30,000. Plus lawyer ka charges of drafting, etc. was separate. And then society ka 25,000 was separate. So stamp duty registration fees is allowed. Lekin the society charge, the shared certificate cost, etc. is not going to be covered. And once you become the owner, now after I became the owner in the office, I did some interior work because it is a double height office, 15 feet. So you can make it into two offices. So I got the loft constructed. I converted into two offices. I created separate doors, one for going up and one for going in the down wala office. And I took two electricity meters so that there are separate electricity bills for the ground floor office and the first floor office. If I want, I can use the full office. If I want, I can give one part on rent. If I want, I can give both parts on rent. I have actually given one part on rent. Second, upper wala part, because in any case, it is not very, friendly as far as running coaching classes are concerned. The height factor comes into play. But the bottom wala office, I have still kept with myself. I, at any point of time, may just start class over there. Of course, projector will be here only. Projector will be here only. But if you want me or projector, you decide. So you never know. I have kept it. But that upper part also, I was hesitant. Someone gave me a really mouth-watering offer that I am in desperate need of an office. Take whatever you want. So I said, to hell with it. We'll see whenever we need. So leja, give me the rent. If a similar offer comes, you never know. I might end up giving the lower wala office. I can set up my practice. Moving forward, I now realize day by day, coaching is becoming a headache. No matter how much effort you put, students don't want to put effort. They have to bargain also. Ultimately, most are not following instructions. I'm not targeting you in general. I'm saying because I'm taking lectures in multiple places. They don't want to follow instructions. Results are going to be mostly negative only, and this is ultimately CA exam. You better focus on your practice and your corporate clients and your corporate training wala part. Just run the office for recording the lectures. So continue your video lecture sale. In any case, moving forward, everybody wants to buy video lectures. If people don't want to come to class, then why have a class? I mean, you start using that office by myself also. But a massive portion was spent in this construction of 2 floors. And that first floor pe I incurred more expense purposely, because first floor mein you don't get easy rent. It is like a loft. So you don't get good rent. So I made it look more and more attractive by spending more money over there to get the mouth-watering wala amount of rent. In fact, ground floor, which I plan to use by myself, I have not done much of expenditure over there. All these expenses resulted in, believe me bro, no matter how much it appears, no, whatever cash flow I had, whatever cash I had, I just eliminated everything to acquire an asset. And in a city like Mumbai, if you want to have asset creation, it works like that only. In fact, there are liabilities in the form of loans. So one thing is for sure, after acquisition of property, you will have these costs and you will have these costs. This cost will be allowed, but this cost will not be allowed. The furniture ka cost is given in point number 2, and your transfer fees, your shared certificate fees is given in point number 1. They won't be allowed. Only stamp duty registration fees will be allowed. Is that clear? So point 18, still I have summarized for you, at least in these points. Okay. Stamp duty will be covered, and therefore point 9 you may mark separately, because stamp duty is separate from home loan. So I want you to have that point separately. Next, point 20 is again talking about mutual fund units, but we have already covered mutual fund units in one of the points, so we don't need it again. So 21, a term deposit of not less than 5 years with a schedule bank. Bank deposits are of multiple types. In terms of accounts, we call them current account, saving account, FD and RD. But these 4 accounts can be classified into 2 types of deposits. Please listen to me. Saving account and current account are called demand deposits. Sir, why demand deposit? Because I can extract, withdraw money whenever I want. And FD, RD are called time deposits, term deposit. They will mature on that date. I can't withdraw prior. If I withdraw, there will be penalty. We can make FD, RD for 1 year also, for 2 years also, 10 months also. But if you are making FD, RD, term deposit means FD, RD. For a minimum period of 5 years, that means you are a long-term investor. We will give you benefit. But if you make FD of 2 years, no benefit. 1 year, no benefit. The tenure has to be minimum of 5 years to get this benefit. Is that understood? And saving account, current account obviously are not investment. They are only temporary parking of money. Any deposit into senior citizen savings scheme. Point number 23. Of course, only senior citizens are eligible for this scheme. Goes without saying. And any deposit of 5-year time deposit. So same, but this time it is with a post office. So the deposit above was with scheduled bank, and this deposit is with post office. Post offices in our country are permitted to run banking business. So scheduled bank or post office, we are going to cover both of them. Is that clear? These are the points that you have to learn. I am not saying that you have to skip the others altogether. Read through them so that you are at least clear about what are the various investments covered. But exam question you will find in the ones amongst the ones which I have marked. You won't find an exam question other than the ones which we have marked. You pick up the RTPs, MTPs, past papers, you pick up the case study digest, your ICAI study material, illustration. You show me one question which we have not covered. Yeah, by the way, by now that most of you all are at least doing some chapters, at least your scope of total income or exempt income or salary house property, till that extent people have reached, even if you have not completed PGBP capital gains. By now you must have realized that we haven't skipped a single question. You can compare it with ICAI study material, and even if you are in the initial part of the additional question bank, backside, towards the later part of the additional question bank, you will get your latest RTPs. Last so many attempts ka RTPs, you will get mock test papers, you will get the MCQ case study digest. So if there is any question which is not covered in the first part of the additional question bank in the form of RTP, it may be covered later. To avoid repetition, I may have removed it from one of the two places, because it is possible ICAI study material question only has come in RTP. So we don't want repetition. Even if it is same question with different numbers, I have kept it. But same question, same assessee, same numbers, then it does not make sense to have the same question at two places. So I have removed those things. Okay, you'll get everything in that. Book solving is your responsibility, of course. This, ladies and gentlemen, is the list of 80C, the deductions for making these investment. I hope you are with me and you remember that we are doing expense related deduction. The main target in this full chapter is going to be this part: individual, self, spouse, children, HUF, any member, actual total contribution of 1,50,000, whichever is low. Are you clear on this, Mitro? Everyone? That was our 80C. While doing 80C itself, we have completed, I don't know whether you now still remember, we have actually already completed section 80 triple C in one line: contribution to pension fund of insurance company. Contribution to pension fund of insurance company. So if you contribute to pension fund of mutual fund company, 80C, and if you contribute to insurance company, 80 triple C. Pagal log they could have written, but people try to find out reasons. So okay, this is only for individuals. So of course pension I won't be creating for spouse or children, even if they don't mention individual here in the pension fund wala point. See, ultimately it has to be only for individual. You are contributing so that after retirement you get. So you will be contributing in your name only. See, life insurance may you contribute for other people. So that way there is no difference. And in any case here, if individual is written, so you could have said or insurance company here itself, but you haven't. Hello. Second, there is one more noteworthy point, that in this section the quantum of deduction is actual contribution or 1,50,000, whichever is lower. Now some people find one reason of having 80 triple C. Guess? Separate limit of 1,50,000. 80C may supposedly I have finished 115 life insurance, stamp duty. So then my pension fund or mutual fund company won't bring any tax benefit. But to use this 150, I can come in 80 triple C. Makes sense, sounds logical. Sir, now we understand why there is separate section. If somebody has finished that 150, so they can come here and take 150. But what if I tell you that this is triple C? So we are doing C, we are doing triple C. Then we will do one more section, 80 CCD. Single C, triple C, CCD. There is some deduction here also. We'll learn that. Very next section is CCD. This is over, triple C is over. Then we have 80 CCE, which says, bro, you want to hear this? You want to hear this? They say 80 C plus 80 triple C plus 80 CCD, the one which we are yet to do. Total maximum 1.5. पता नहीं जी कौन सा नशा. Any other Bollywood song for intoxication? Nasha, nasha. No. उड़ता पंजाब any song? क्या? चरस गांजा मेरे को प्यारा. I have never heard this lyrics. Carrie Minati song. Carrie Minati who? YouTuber, influencer. Carrie Minati ka song you remember with lyrics. What is going to happen with this generation, eh Bhagwan? But don't you think that they have consumed some stuff while writing the law? Single section limit is 150 and aggregate of 3 section is also 150. See, if you keep single section, say 80C ka limit 150, triple C limit 150, total 2 lakh. Still we have sense in having a separate section. But after you come across 80CC roughly, in fact I will make you write. I have to do first CCD. So we will do it properly. One thing is clear here, that it is a total waste of time and energy. Total waste of section. And if by simplification of law anti means that now 80 triple C will be merged into C, that is not simplification. The writing it was itself illogical for the first place. So that's the only simplification that she has done. If you observe carefully, what she has done? Number of sections and number of words reduced. Content is same. But till now we were saying that merge them. So if we merge them, she is not doing anything great. But yes, these words get deleted, no? So I have reduced the income tax law. So best, first increase, then reduce. There is an airline in our country called Indigo Airlines. You know what is the policy of Indigo Airlines? I'll tell you. Recently, I happened to take a flight from Jodhpur to Mumbai. Jodhpur to Mumbai flying time is 1 hour. My flight started at 9:30 in the morning. So should land at 10:30. In the itinerary in my ticket, it was said departure from Jodhpur 9:30, arrival in Mumbai 11:30. Promised arrival time is 11:30. We came at 11, which was actually half an hour late because flying time is 1 hour. Indigo ka claim we are half an hour before time. If you have little idea of standard costing, set the standard so low that the variance is always favorable. Your standard should be so low that variance is always. See, if you think that I will get all India rank 1, so the final result will be adverse variance. If you plan that, sir, I will get single digit marks in all, single digit rank nahi. Single digit rank. My target is to get single digit marks in every subject. I'll get 5 marks in all papers. And supposingly you get 10. So favorable variance. Standard costing has its limitations where you are setting the standard. The variance will still, I hope you are not thinking how I know adverse variance, favorable variance. I have taught costing to CA final students. See, thank God I stopped teaching costing. Removed from CA final. But I have taught, and standard costing, marginal costing were in CA final syllabus. These two topics of costing were always a part of inter and final. Do not influence your juniors to join any coaching class. I am saying don't even tell them join my class. Just tell them one thing, that whichever class you like, you join. Ask that class only one question before joining at intermediate. Only one question. At inter, between foundation and inter, you have to draw a line. Just ask them one question. Name of teachers subject wise at inter and final. Subject wise teacher name at inter and final. If the coaching class is giving you the same teacher at inter and final for the same subject, that means that class is worth joining. Let it not be my class. Join whichever class. I'll not influence you. Challenge hai if any coaching class will give you names. Challenge hai, challenge. Open challenge. You have doubts, no? You have to send email to their admin team. You can't even contact your faculty for your doubts. Career ka question hai. Okay. So, end of the day, ladies and gentlemen, we realize one thing very clearly, that 80CCC was never required, but it is there. And single section and total section ka limit is also same. So we can now safely conclude that we don't need 80CCC, but it is there in your exam. So contribution to mutual fund company will be covered in 80C and insurance company will be covered in 80CCC. Is that clear? Next. Section 80 CCD. Section 80 CCD. Contribution to NPS. NPS is Notified Pension Scheme. So government, when they brought this section, they said that we will bring some scheme. We will notify means announce a scheme. And the government did announce a scheme called the Atal Pension Yojana. See, Yojana is the Hindi translation of the word scheme. Pension is pension, of course. What is Atal? Bolna mat Setu. Former Prime Minister of the country, Prime Minister Atal Bihari Vajpayee, he certainly falls in top 3. What a guy, bro. What a visionary man. This was basically a tribute to former Prime Minister Atal Bihari Vajpayee, because this scheme was announced after 2014. See, any scheme before 2014 in our country, no, whether related, unrelated, it would have been Rajiv Gandhi. Everything, bro. Schools, colleges, airports, everything. Then we used to have Rajiv Gandhi Khel Ratna, and he never played any sport in his life. But it was Rajiv Gandhi Khel Ratna. In Mumbai, we have a bridge called Sea Link, Bandra Worli Sea Link. It is called Rajiv Gandhi Sea Link. In his entire lifetime, he may not have come to Mumbai twice also. I don't want to take anything away from him. He is former Prime Minister, and I believe he himself falls in top 3. If today India has computers, it is only because of Rajiv Gandhi. He was a visionary man. He knew what will India need 30 years after today. He worked on that. Computers, internet technology. It was during his tenure that India went into liberalization. Dr. Manmohan Singh was the finance minister, and historic budget 1991. Even today they talk about it. That Dr. Manmohan Singh brought the best budget ever in independent India. That was under the leadership of Prime Minister Rajiv Gandhi. But that does not mean that Arjun Tendulkar will become Indian cricket team ka opener, no. Arjun Tendulkar should open the innings. Why? Because he is Tendulkar's son. Arjun should have the talent in himself, no, bro. Your surname can take you only to limited places. You have to do some contribution. So Rajiv Gandhi sir, we want to keep his name alive. So everything we are naming after him. See, if I want to keep my name alive, one proper child is enough. If you have one proper child, he will keep your name alive. Rajiv ji does not have that privilege. So how to keep his name alive? Before 2014, everything was Rajiv Gandhi. Bro, you know Mark Zuckerberg, founder of Facebook. He invented Facebook where? America. In India, it would have been called Rajiv Gandhi Dost Banao Yojana. Ha. And Instagram would have been Rajiv Gandhi photo dikhao, Rajiv Gandhi naach dikhao. Reels, no? Ha. So we have this thing called Atal Pension Yojana as a notified pension scheme. Understand what is happening. Okay. You are not a government employee, not a government employee, not a government employee, not a government. Will you get pension from the government? A stupid question I'm asking. Non-government employee, will you get pension from government? You go to the government and say, sir, please, sir, pension. I want pension from you only, sir. I don't trust mutual fund company or insurance company. Ek minute, wait. I can subscribe to fund of mutual fund company under 80C and insurance company under triple C. But you go and tell the government, sir, I want pension from you only. I trust only government, bhai. अरे वो मोहम्मद सिराज said no, I trust only Jassi bhai. I trust only. I want pension from you. See, government is saying you are not our employee, we can't give you pension. But we can have a scheme for you. Just like you contribute to mutual fund and insurance company to create your corpus, do one thing, contribute to our scheme. So during your work life, in that government ka scheme, you put money. And after retirement from that fund, you get your pension from the government. Trustworthy place. Employees ko they will give direct, but other people will have to create their own fund. You contribute to mutual fund company, you get covered under 80C. Insurance company, you get covered under triple C. You directly contribute to government scheme, 80 triple C. CCD. Mutual fund company, C. Insurance company, triple C. And direct to government. Ultimately, all of them are safeguarding your future only. So let us see how 80CCD works. 80CCD ka deduction is divided into two parts. From my income, if I contribute to government scheme, am I going to be eligible? And let me be clear about one more thing. I may be salaried employee, I may be professional, I may be anyone. I have income in the form of salary or house property or PGBP, other sources. I am using that money to contribute to government scheme so that after my retirement, government pays me. Well, one thing is clear, even businessmen can make this contribution just like PPF. It is not necessary that only employees are allowed to make this contribution. Therefore, I am not calling it employee contribution like PPF, I am calling it own contribution, self-contribution. And then they also talk about something called employer contribution like we had in RPF. In RPF, we had employee contribution and employer contribution. So there is government ka scheme in which government is putting money, you are putting money and your employer is also putting money. A lot of private sector employees, in fact government employees, you should know this, that after a point government realized that paying pension is a big burden to them. If from 1997 to 2025 to 28 years, my grandmother is getting pension even today from government, and she is just one of the spouses of the hundreds and thousands of government employees. Just imagine how much burden government has every month in the form of pension. I told you about the other two brothers of my grandfather, second and third, all of them were government employees. All of the other two are getting a good 60-70,000 rupees per month, and they don't have expense of 700 rupees also per month, because children are taking good care of them. They don't have to pay for a single thing. 70,000. My grandfather used to get less pension because he was eldest amongst all the siblings, and because he had to spend a lot of money in the marriages of his younger brothers and sisters. Father was freedom fighter, did not have, there was no food to eat also, there was no money to buy food also. So as a railway employee, whatever funds he could accumulate with that, he withdrew money from his pension fund, from his gratuity fund. Every time there was a wedding in the family, he exhausted his savings. So the pension which my grandmother gets is lowest amongst the three brothers. But the others are getting good 70,000 plus. And every few years they revise this pension scheme. They call 6th pay commission, 7th pay commission, 8th pay commission. Every time there is revision, they get extra money. Crazy burden on the government. So these days government is also being very smart. Gujjus are ultimately running the show, no? They are very smart when it comes to monetary matters. They say, bro, you are working with the government. After you retire, we don't want to give you any pension. Right now, what do you want? You say. And same policy some private companies are also using. Supposing the private company offers me job at 1 lakh rupees. I'll say, sir, for my running day-to-day expenses, 1 lakh may be enough. But what about my future? 10 years I will give you. After 10 years, if I will not have any fund, how will I survive at my retirement? So that private company also offers me, chalo, no problem. I won't give pension because this is private company. In fact, government says now new employees we will not give pension. During your work life, we will give you salary. First of all, from that salary, you make whatever investment you want. This is an example. You can contribute to PPF, you can buy equity shares, mutual fund, whatever you want. Plus, over and above salary, we will give some contribution in your NPS account. Just like once upon a time, we were doing in your RPF account. So, there is going to be your employer who is paying you salary plus some contribution in the NPS account. That is your employer contribution. Is this over and above your salary? So one thing we all understand that this amount will be added in salary because extra benefit from employer. But after adding in salary, we will also give you deduction of the same. And of course, you yourself from your income can contribute. Bro, you are not employee, you are a businessman. No, you can contribute directly. But you just won't be having any salary. You will be having your PGBP. You contribute from wherever, that is your choice. Employer is contributing, so we will add in salary and give deduction. Same thing we did with RPF also. Boss was giving salary plus employer contribution. We added that in salary. But we added in inner column because there was an exemption, exempt up to 12% of salary. Here, we will add this full amount in the outer column, not in the inner column. Because here we are not giving you exemption. Here we are giving you deduction. Please understand, if I am making my computation of salary, so I will write my basic salary here. Then my employer has given money in my RPF account. So I will write it here because I have to give exemption, 12% of salary. After giving exemption, it will come here. There is no deduction. Deduction is only for employee contribution because that I make from this amount as per choice. If my employer is also giving me some money in my NPS account, that I will directly write here. Sir, why? Because here there is no exemption. This will become my total. Assume salary is the only income. So we get GTI. In this GTI, now we will give chapter 6. Wait. Employee contribution to RPF will come. Because employer contribution ka we get exemption. Employee contribution, so I will make from this money, no basic salary. Then employee contribution to NPS will come. This is this self contribution which we are covering on the left side. And you want to guess? Employer contribution to NPS. In other words, in NPS, employer-employee both contributions are deductions. And in RPF, it's a revision. Employer contribution we get exemption and employee contribution we get deduction. Understood? So, we are going to get deduction of two contributions. Your own contribution as well as employer contribution. Everyone is with me? Own contribution I will discuss later. First I will discuss employer contribution, that is covered in section 80 CCD subsection 2. Your subsections are important. I'll tell you the reason in some time. Own contribution ke liye we have two sections, two subsections. We have section 80 CCD subsection 1 and we have section 80 CCD subsection 1B. For own contribution we have two sections, subsection 1 and 1B. I'll discuss own contribution later because own contribution, please be clear, can be people who are employees or not employees also. If I am employee, I will contribute from my salary. As a tax professional, as a professional, as somebody having PGBP income, I will contribute from my PGBP. I just won't have this. But this anybody can have. Is that clear? Employer part is easy. Let's complete that first. Do you realize that this deduction can come only and only if you are employed? A non-salaried will have only 1 and 1B, will not have subsection 2. You realize this? Sir, why? Because if there is employer, then only there will be employer contribution. Easy? Do you realize that this will be first added in my salary? Do you realize? Do you agree with this? This will be first added in my salary because this is over and above. In fact, outer column because we are giving deduction, not exemption. And a very, very important thing to note, continuously orally, I have told you that new regime chapter 6 are not allowed, not allowed, not allowed. But this is going to be allowed in new regime. New regime starts by saying no chapter 6A. Hello. Except the following. There are some exceptions. This is the first exception. Others will come. 80 CCD. Suno, copycats. 80 CCD subsection 2 will be allowed. Which means, let me at the outset clear. They have specifically written subsection 2. I told you subsection number is important over here. And there is logic. Please understand. This amount is coming in my taxable income without receiving the cash. Because the cash I have not received. Cash has gone where? In the NPS account. Without receiving cash, it is coming in my income. So I have to subtract also. This is a matter of choice. I received the cash. Then whether to invest or not to invest was my choice from my salary or PGB. Even if I invest, but I want to go in new regime, I won't get the deduction. New regime does not give chapter 6. But there are some exceptions. Exception is not NPS. Nice, sir. Nice. Exception is not NPS. Exception is employer contribution to NPS. Exception is not 80 CCD. Exception is 80 CCD subsection 2. You understood? And the logic is because we are first included in the salary without having cash. And this was not your choice. Employer has put the money directly over there. Sir, here also. Money is not with me because I am investing. But I am getting cash and investing. No, it is investment by choice. So only in the old regime. Are we clear? New regime will allow 80 CCD deduction. True or false? True or false? New regime will allow 80 CCD deduction. True or false? False. Only 80 CCD 2. Is that clear? So, 80 CCD 2 is when your employer has contributed, then only question comes. So, first of all, you have to have an employer. Secondly, it will be added in your salary. Thirdly, because we are adding, so we will give deduction whether you take new regime also. Last, what is going to be your quantum of deduction? How much deduction you will get? How much employer can contribute? Want to guess how much employer can contribute? Bro, any amount he can contribute. Employer can contribute double of your salary. If he is ready, you won't say no. And that full amount contributed will be added in salary also. But deduction won't be of the full amount. There will be a maximum limit like that is everywhere. The maximum limit will depend on whether you are government employee, both central government or state government, or whether you are, because government employees in our country take birth. Why? Sorry, I forgot your name. Really sorry. Nandini. Government employees take birth. Why? To enjoy. You never went home and said this. Don't, huh? And if you do, at least don't take my name. You are at your own risk. Not के sir stays nearby only. तो चलो. हाँ. काय बोलला रे क्लास मध्ये? नहीं, please. You are at your own risk. Okay. You want to guess in which of the two there will be higher exemption? Haha. Lol. For government employee, the exemption is going to be actual contribution. Who is making this actual contribution? Government, being the employer, or 14% of your salary, whichever is lower. Actual contribution or 14% of your salary, whichever is lower. Salary will be basic and DA in terms. So supposingly your salary is 1 lakh. Basic DA in terms all included. Salary is 1 lakh. Everyone is with me? Government has contributed 20,000 in your NPS. Government has contributed 20,000 in your NPS. So first of all, under income from salary, we will write 1,20,000. Why, sir? Because 20 is extra. That will be my total. Now in that total, I will give deduction of 14,000, 14% of salary. And if the contribution was 12,000, we would have given 12,000. Restriction is maximum limit of 14%. Is that clear? However, for non-government employee, it is going to be actual contribution or 10% of salary, whichever is lower. So same data if we take about a non-government employee, so income may still we will write 1,20,000. Deduction we will give only of 10,000, 10% of salary. Government employee will get 14% and non-government employee will get 10%. Is that clear? So government employees are getting greater benefit. You private sector people will get 10%. Now, so no, oh private employees, private employees, do you want the same benefit as government employees? We are asking you, you have the option of saying no. Means, do you also want 14% deduction? See, right now, if we take the 1,20,000 ka example, government employee deduction is 14,000 and non-government employee deduction is 10,000. I am asking you, do you also want extra 4,000 deduction? Yes. Okay, fantastic. With effect from assessment year 25-26. That is amendment. Every time there is an amendment, I will teach you like this only. Their maximum limit also, I am just saying maximum limit because it is actual or that limit whichever is lower will become. Are we bringing you at par with government employee? So now they will also have actual or 14 whichever is lower if you take new regime. Means government employee old or new 14%. Non-government old regime 10%. Non-government new regime. Wow, sir, if I go in new regime, it is attractive. 4,000. 4,000. Or rupee terms mein let's not discuss because in our example it was only 1 lakh ka salary, but 4%. These small things they are giving as benefit in new regime, but big things, sir. Dekho, for this greed of extra 4%, you will come in new regime. Wow, sir, 4% extra, and this will go away. Uska kya? Sir, CCD 2 will come in old as well as new, and in new I get 4% extra. Government employee does not get that also because already put in. I'll get 4% extra. Hello. For getting 4% extra, stop taking subsection 1 and 1B. Bro, in fact, no 80C, no 80CCC, no 80D. Basically, government is making you 80U. By showing you what? Lollipop. Have you offered ever biscuits to dogs? You must have, of course. Chiku Chibu are dogs or cats? I forgot. Cats, eh? Dogs, you offered? You are the dog here. When they are offering 4% biscuit. Bro, don't make Parle-G dog ka biscuit, please. I also eat Parle-G. And somewhere secretly you also. Because Parle-G dipped in tea, there is no other biscuit which can taste like that. Parle-G has been that biscuit, you know, for the lower class, for the middle class, it has been always the symbol of status. And even today, the taste has not changed after so many decades. Size has reduced, of course. But at 4-5 rupees, what do you expect in today's days and times? So Parle-G, in fact, there used to be another company which tried to compete by bringing something called Tiger biscuit. The Tiger remained that dog ka biscuit, and Parle-G even today is middle class favorite. So let's not discuss that. But then you are the dog in this story who is getting extra 4%. Go take extra 4%. Are you clear about the deduction as far as employer contribution is concerned? Note the following point. One, you need to have employer. to whatever he contributes will be added in your salary. 3, you will get this deduction in the new regime also because we are adding in salary without cash flow. And 4, there is a maximum limit. Government employees always maximum 14%, private sector old regime 10% and new regime 14%. Now let's talk about own contribution. Your own contribution will be split into 2 subsections. First of all, it is not that I am making 2 contributions. I will contribute once. I will earn my salary. It can be PGBP also. One thing you have to understand, this guy can be non-salaried also. Here you have to be employed. No. The left side own contribution can be from your PGBP amounts also. Whatever I earn, I'll make one lump sum contribution. Now what I have contributed, a portion of that I will take deduction under subsection 1, another portion I will take in subsection 1B. There are limits under both. First, let us understand what are the limits. Subsection 1B is very, very clear. Subsection 1B says we will give you maximum benefit of 50,000 rupees. Whatever you contribute in this subsection, you can take deduction of 50,000. And subsection 1 says that is separate. That 50 is separate. Under me, you can take deduction of actual contribution. There has to be a maximum limit or 10% of your salary, whichever is lower. Salary is again same. Basic plus DA in terms. But when I say the limit here is 10% of salary, a good student should immediately ask a doubt. But this guy can be non-salaried also. No, right side compulsory salary. This guy can be non-salaried. And if it is non-salaried, then 10% of salary is 0. No. So I can still contribute in NPS. No problem. If you are non-salaried, so you don't have the above limit, then your limit will be the actual. See, actual has to always come restricted to 20% of your gross total income, which makes sense. So for salaried employee, the limit is 10% of salary, and for other people, the limit is 20% of GTI. Everyone is with me? That means, is there a maximum limit under subsection 1? I am coming to that. Is there a maximum limit under subsection 1? Which is a percentage limit, 10% or 20% based on salaried or non-salaried. And is there a limit in 1B, which is a rupees limit, a flat limit of 50,000. Now, please understand whether this contribution or this contribution, both I am making from my salary, PGBP as the case may be. My total contribution made has to be divided into these two. So, I will first take an example of what is my total contribution. Supposingly, my monthly salary was 1 lakh. So, my annual salary is 12 lakh rupees. From this 12 lakh, I have contributed, say, 2 lakh rupees in NPS, which comprises of this total of mine. So, my options are, out of the 2 lakh that I have contributed, I can first come here and take benefit of 50,000 only. I can't take full 2 lakh. That means I have taken benefit of 50,000. I have still not taken benefit of 1 lakh 50 that I can bring here. Actual contribution 1 lakh 50, because 50,000 already gone. Restricted to 10% of salary, which is 12 lakh ka 10%, 120. So I will get deduction of 120 over here and 50 I have already taken. That is one option. Option 2, I first bring my 2 lakh here. So 2 lakh will be restricted to 10%, 1 lakh 20,000. So how much is not taken as benefit still? 80. That 80 I will bring here and restrict it to 50,000. You understand what I am doing? I'll write down these two options for you. Okay. With the help of an example. Supposingly my salary is 12 lakh. Okay. And my contribution is 2 lakh. So what are my two options? My first option is I will go and first take the deduction under 1B. 50,000. Correct? Hai? So how much is gone? 50. 1B is gone. Now I go to subsection 1. Correct? Hai? I have contributed how much? I'll consider only 1.5 lakh. Sir, why? Because 50 I have already taken. Or restricted to maximum of 10%. That is 1.2. So whichever is lower, my answer will be 1 lakh 20, giving me total benefit of 1.7 lakh. You understood? So that means in this option, I first took 1B and second I took subsection 1. Is that one option available to me? Chalo, frame the other option for me. Frame the other option, then we'll have discussion. What, you had this doubt, no sir, what will go in 1, what will go in 1B? This 2 lakh has to go in both. But our choice is this first or this first. Come on, frame the second option for me. First I will take what? Subsection 1. How much I will take in subsection 1? 2 lakh, but it will be restricted to maximum. So 1.2, 10% of salary. Now I am still left with balance of 80,000, but that 80,000 will be restricted to maximum of 50,000, which again effectively makes my deduction 1.7 lakh. However, the difference in this option is I have first taken subsection 1 and then I have taken subsection 1. If you look at the numbers which are floating in front of you, you realize that my 2 lakh has to be adjusted in these two. Any adjusted in one of them, the balance will go in the other. So I can take first 1 then 1B or first 1B then 1. And if you see the numbers, somewhere both options are giving us the same answer. You observe that? We will first give preference to 1B, then we will come to subsection 1, which simply means that I am asking you to follow option 1. First take 50,000 where? In 1B. And only the balance you will take in subsection 1 and subject the balance to the balance limit. So first understand, my contribution only I am getting deduction. My contribution is split over 2 subsections. I can take this first or that second, that first or this second. Answer is coming as same when we applied the limits. But only thing that we have to understand that whatever I have taken in the first subsection, only balance will go in the other subsection. And randomly, I concluded by saying give preference to subsection 1B first. Option 1. So I have to give reason. Sir, why 1B first? There has to be some reason. Everyone is with me? The reason is hidden in section 80 CCE, which says, are you taking your deduction under 80C? Yes. Are you taking your deduction under 80 CCD? Bolo yes. And are you taking your deduction under 80 CCD subsection 1? This total will be restricted to maximum 1.5. Which means that whatever I take here, I will get separate from that one. Why I have to give preference to this? Please understand. Supposingly I give preference to this. But in 80C I have already finished 1 lakh 50. So any rupee that I take here is of no use. But if I take this 50 first, no other limit can affect this 50. You know what is the problem with subsection 1? First I have to apply 10% limit or 20% as the case may be. Then I have to apply total limit. But in subsection 1B, there is only single limit of 50,000. Once you are in that 50,000, nothing else can affect you. Whatever be your ATC or triple C, this 50,000 is over and above. When Jetli ji introduced subsection 1B in 2016 or 17, he brought it. He said, okay, currently people are able to take tax benefit only of 1,50,000 altogether because there was no 1B. Only 1,50,000. I propose that NPS will bring extra benefit of 50,000 without getting affected with the existing limits. This will be over and above. So, subsection 1 is covered in the limit. 1B was not covered. So, now as smart chartered accountants, we should first take that. You know, I'll tell you the reason. In this example, it is not making a difference. But supposingly, here my answer was coming to 1.2 lakh. And here my answer was coming to only 40,000. My total contribution maybe say was only 1,60,000. So I give subsection 1 first, restricted to 10%, 120, and balance I take. Correct? Now this 120 is getting wasted because 80C I have already completed my 150. And here I am getting only 40. I could have actually brought 50 here first and taken only 110 year, which is within limit, but I am not getting any benefit because I have completed 115 ATC. And therefore, we will always give preference to subsection 1B. The logic is subsection 1B is not covered under 80 CCE limit. 80 CCE का total limit applies to 80C, 80 triple C and 80 CCD are the only three sections where it is applicable, but only subsection 1 of 80 CCD. So, I want to see what you have understood. 80 CCD subsection 1B, this limit is not applicable. That means it is unlimited. No, 50,000 का limit है. And one hidden thing, 80 CCD subsection 2. Also, this limit is not applicable. But that also has its own limit of 10% or 14%. So, employer contribution has only 10 or 14 ka limit. Subsection 1B has only 50,000 ka limit. But subsection 1 has first own limit and then total limit, and therefore try to keep as less possible over there. Give it last preference. Understood? This, ladies and gentlemen, is your joint reading and understanding of the three sections 80C, triple C, CCD. Everyone is with me? Fantastic. This completes a big and major part. This is the biggest part of expense related deduction. We have a couple of big sections. 80D is big, 80G is big, but most sections are very small. We'll take a break of 10 minutes and continue this after the break. Hello. Check. Arey baap re, what is your level of attention? Pagal log. Obviously. Okay. 80C plus 80 triple C plus 80 CCD subsection 1 shall be maximum 1.5. Everyone is clear? No doubt, no confusion. At least have some level of attention in class, bro. All right, ladies and gentlemen, let's go. Let's go ahead. Section 80CCH. Bro, CC done, triple C done, CCD, CCE. There used to be some years ago CCG, not there anymore. Okay, CCF, CCG, not there. CCH. Contribution to the Agniveer Corpus Fund. Contribution to Agniveer Corpus Fund under the Agnipath scheme. Sir, you know which is this Agnipath scheme? This is not Khushiyan Chumlu Yaro Lose. Arey, this is not Hrithik Roshan. This is not even Harivansh Rai Bachchan sir ka poem. Harivansh Rai Bachchan sir poem. Agnipath. Vraksh ho bhale khade ho gane ho bade. Na. Central government of India has launched a scheme called Agnipath scheme, under which they will maintain something called an Agniveer Corpus Fund. What exactly is the fund? And why the controversy behind it? The deduction part is like less than 2 minutes. 2 minutes I can tell you what is the deduction on the left side and the right side. The point is that does the current generation even know about what is this Agniveer Fund? What is the Agnipath scheme? When the scheme was announced by our government, why there were riots across the country? What was the protest against this scheme? Why did people not like this scheme? And despite people not liking, the government went ahead with the scheme. Traditionally and historically, admission in armed forces, Indian Army, you had to go and take training in the National Defense Academy. In your childhood, you were mentally ready. When in Bihar a child grows or is born, in the childhood he is taught that you will become IAS officer. In Gujarat or Rajasthan, when a child is born, childhood mein the child is taught that you will go and open shop, dukan. In North India, some of the states, the moment there is a child born, childhood mein the child knows that I will grow up and join the Indian Army. They undergo diet regime since childhood. They undergo workout, health related things since their childhood. Why, sir? Because we want to join Indian Army. Childhood dream. Everyone has a dream, no? Like I have Deepika ji. Everyone has dream. Their childhood dream is to join the Indian Army. Suddenly one day, central government thinks like this. Please pay attention. Central government, is run by Gujus. So they are very particular about monetary matters. They are like a person joins Indian Army, is part of army for some years, retires after some years. And after retirement, we have to give lifetime pension because government employee. If you have participated in some war and then you retire, you still, have done something good. India saw the last war, 1999 Kargil war, before you guys were born. India had war, 1965, 71. There were wars. Last time India fought a war against Pakistan, 1998. 1999, the Kargil war. Supposingly someone joined the army in 2000, has retired in 2025 without doing anything. With due respect to the armed forces, actually the problem is in our country. Farmer, cow, Sri Ram and armed forces are sensitive issues. I repeat, if you think about it, farmer, cow, Sri Ram, armed forces are sensitive issues. You have to be very careful before making a statement on them. So armed forces ka people are retiring. They are expecting pension, massive pension. And there is some emotional attachment with them, not realizing the fact that last 20 years, last 2 decades, they haven't fought a war. Retirement without fighting a war and lifetime pension. And government also knows the probability of India going into war in the future also is less. Unless there is a world war and we are a participant, we will avoid having an individual country wala war. Because war finishes off the country economically also. So why take the lifetime pension burden on us? We want to stop pension of armed forces. This is the intention. Okay? The intention is we want to stop pension for armed forces forever. But if we make announcement that from today, no pension to armed forces, you understand the controversy it will create? Idea. From today, we will not give you admission in armed forces. We are stopping any recruitment in Indian Army. You heard me right. Youth between the age of 17 to 21 will have to enroll in a scheme called Agnipath scheme, and these people will be known as the Agniveers. You have to enroll in the scheme as Agniveer. Everyone is with me? You will be getting some training and then you will be getting a posting in the army for 4 years. And after 4 years, you have to compulsorily retire without any pension. During these 4 years, we will give you salary, plus we will give you a contribution in a fund. That fund after the end of 4 years will become a corpus. That is your pension. No pension. 4 years mein you don't get pension. Compulsory retirement after 4 years. Only 25% will be retained. 75% have to compulsorily retire. The benefit is, we give armed forces my recruitment. 75% of them are going to retire in 4 years. If you retire in 4 years, during those 4 years, we are giving you salary plus corpus. Salary plus corpus. And that corpus is only your pension. So lifetime pension over. During those 4 years, whatever we have paid, we have paid. Story is over. No need to ask for any pension. That was the intention of the government. The intention was to stop pension altogether. So we can't stop from the existing people. What we are doing is new people, we are not giving recruitment. But understand now the protest or the controversy. Protest. Sir, you are creating such a weak army. Means there will be a point when the highest experience of an armed force member will be 4 years. You understand that point? India has not gone in war for the last 2 decades. Does not mean there will be no war in future. Thank you. There will be no war in future. ऐसा कोई rule नहीं. There can be war in future. Second, those children who since birth have a dream, I will become a member of Indian Army. The dreams are now going to shatter. Because even if I join the Indian Army, my future is maximum 4 years. What after that? The probability of me coming in 25% is too less. Full life I was dreaming of Indian Army, Indian Army, Indian Army. You are telling me I'm not allowed only in Indian Army? Third, how can you take people for 4 years also and not give them pension? Ultimately, they are working for the safety of the country. Armed forces, we have soft corner. Fourth, the youth who is joining is between 17 and 21. That is the peak of your career. Huh? This is that age gap where you have to be clear that I am going to go in this direction or that direction in my life. You know, 17 is your 12th and 21 is your graduation. You make a career choice in this range. Check kar le. A career choice has to be made in this range of age. You are sending him in army for 4 years. After 4 years at the age of 25, he is coming back from army. Now what to do? Just imagine 25-year-old having no job. What is your qualification? Retired from army in 4 years. Who will give me job? Where will I now go? And I will have to restart zero se. It is going to be difficult. So, as someone who has dreamt of, Indian army since childhood, those kids from north of India, wherever, let's not, regionalize it, wherever. My tenure is 4 years and after 4 years I am careerless. Where do I go after 4 years? Big controversy. So, in this, some state chief ministers, because ultimately you will remain state chief minister as long as you sing praises of your bosses in Delhi. For example, Madhya Pradesh chief minister Shivraj Singh Chauhan changed now at that time BJP chief minister. So he can't go against a Modi policy. He announced that any Agniveer retiring from army after 4 years will be given preference in state government jobs. Maharashtra chief minister also, Mr. Fadnavis, at that time. So this is that 2019, prior 2019 year. He was CM 14 to 19. He said, I will give preference in state government jobs to Agniveers, so that your future is still secured after serving for 4 years. But basically, you are creating a weak army with this. Therefore, the protest. But because government wanted to stop the pension altogether, they went ahead with the plan. And therefore, now there is going to be an Agniveer Corpus Fund. So basically, this time you are government employee. And who are you? You are the Agniveer. Will you get salary for those 4 years? Plus, there will be your Agniveer Corpus Fund in which the government will make your contribution. Is this over and above salary? So obviously first be added in your salary, but then we will give you deduction. And from your salary also, if you want, you can contribute. We all are aware about employer contribution, employee contribution concept. You can contribute. So we are giving you 2 subsections here, 80cch subsection 1 and we are giving you 80cch subsection 2. And those of you all who still remember little bit of notified pension scheme, it is going to be very easy for you to understand. Sir, what? 80cch subsection 1 is going to be 100% deduction of your own contribution. Can I say this you will be making from your salary? 100% deduction. So, NPS was complicated. Subsection 1, 1B, separate limits. Here there is no limit. Whatever you contribute, you get full deduction. Government has to make this scheme look attractive at least. And here, 100% deduction of, so again no limit, of your employer, and employer is none other than government contribution. You will get 100% deduction of both contributions. NPS was same, no? Own contribution and employer contribution. But both were having limits. This is without any limit. But do you realize 2 things about this? Because is this over and above your salary? So yes, it is going to be first added in your salary. Make sense? Second, guess karo. The second case where it is going to be allowed in new regime. Second case of allowing in new regime. But be clear, only the employer contribution. Why? It is added in income without receiving the cash. Employee contribution, is that a matter of choice? This will be only in the, actually I don't have to specify, I have to specify only about subsection 2, but to avoid confusion, that 2 cases where we are allowing chapter 6A in new regime, both of them are the subsection 2, that is employer contribution. This is still easier because there is no limit on the individual contribution. Both are 100%. But remember that the left side subsection 1 will be allowed only in the old regime and the right side will be allowed in the old as well as new regime. Clear hai? Fantastic. That was our 80 C, C, H. The 80 C series, observe the C series, that is all investment for future. Whether it was C, triple C, CCD, CCH is also investment. Now we go to the D series. D series is health related. You know, they have grouped the sections like this. C series is investment related, D is health related, E is interest. Interest on education loan, interest on EV loan, electric vehicle. And there is G series where you give donation to charitable trust, donation to political party, etc. So now we are done with the C series of deductions. We go to, ladies and gentlemen, section 80 D series. First section, section 80 D, deduction for medical insurance premia and etc. Medical insurance premia, etc. Before I start explanation, I have to clarify two things. Sir, what is this? Premia. शाहरुख खान का मूवी बनिए का दिमाग, मियां भाई की डायरी. This is singular plural. You know singular plural? Single premium is premium, multiple premium is premia. You didn't know this? No problem. If you pay one person's premium, it is premium. If you pay two people premium, it is premia. With respect to medical insurance. Therefore, premia. And sir, why etc.? Because there is one mistake which a lot of professionals also make. 80D is not only medical insurance. There are some other types of payments also covered. Expense related deduction. So one thing is for sure, there has to be outflow of money. Not just premium, there are some other payments covered. Premium is most popular, just like in 80C, life insurance premium is most popular, but there are other contributions also. So here also, there are other contributions, therefore we call it etc. Premium, multiple premium and other contributions. Let us see what is 80D. To secure your health, you are investing in health insurance. You understand, life insurance is different from health insurance. You are investing in health insurance that will take care of your hospitalization expenses. You are going to pay premium to the medical insurance company and buy a policy. And if you have hospitalization, the massive portion of the bill will be borne by the insurance policy. Subject to the policy conditions, there is a certain limit on room rent, there is a certain limit on total expenditure, there are certain charges which are not covered. In that, supposingly you are admitted in the hospital and you eat something from the cafeteria which is added in the bill. The certain charges are not covered. Treatment charges are going to be covered. Some medical insurance policies cover dental costs, some don't cover. Some medical insurance policy cover pregnancy, hospitalization. Some medical insurance do not cover. See, if you want to cover pregnancy, hospitalization, kya smart people we are in India. I know that I have to plan a child in the next year to buy insurance now. Nahin. Some policies cover pregnancy, hospitalization if you have been a policy holder for 3-4 years. After 4 years, you are eligible for pregnancy hospitalization. They are also very smart. But end of the day, you are buying that policy and paying that premium as a personal expenditure. You are not going to get deduction under PGBP. But is the government desirous of encouraging these investments? So we will give you deduction under 80D. Just like we were encouraging life insurance under 80C, we are encouraging medical insurance under 80D, subject to the following points. First point is, which assessee is going to be eligible for this deduction? This deduction, like 80C, will be available to individual or from here onwards, the chapter will start getting complicated. This deduction is available to individual and sir, why company, firm, AOP, LLP not covered? Because they will take medical insurance of employees. That is PGBP. Hello. So individual and nature, because for them it is personal insurance. Individual will get deduction in this section twice. First time you will get deduction when you are making contribution for self, spouse, or your dependent children. Did you notice the change here? So self covered in both, spouse covered in both. Bro, elder, younger, dependent, independent, resident, non-resident, any kind of spouse as long as your spouse. But children covered in 80C always, in 80D only if dependent. Can you observe the first change? And second time an individual will get 80D deduction if you have contributed to medical insurance premium of your parents. Focus on the word used. They are only saying parents, parents, parents. That means dependent parents or independent parents? Both. Resident parents or non-resident parents? Sir, you are only non-resident then? Still, because you are individual. Senior citizen parents ke non-senior citizen parents? Both. Parents ultimately are parents. Correct hai? As long as they are your parents. But then own we have to specify only in spouse. Individual will get deduction twice. Sir, what do you mean by deduction twice? Ultimately it is 80D deduction. No, I'll explain. What do I mean by twice? There is going to be some contribution that you make for all of them. Is that your total contribution? It will be restricted to a maximum deduction. There is a maximum limit which will later learn 25,000. For the parents category, you will contribute premium of your parents. That's your total contribution. There is a separate maximum 25 limit only for medical insurance of parents. Separate limit of 25. You have to do the calculation only separately. This total restrict to 25, this total restrict to 25. And of course, HUF is as cool as ever. HUF can make the contribution for any member, and obviously that 25 has to be separate. It's a different assessee only. So HUF is never going to create any confusion. Confusion will come in individual HUF. Confusion will come in individual ka two categories. First category, self, spouse, dependent children. Second category, parents. First category maximum limit 25,000. Second category maximum limit 25,000. Sir, they are two separate calculations. You take this total and apply 25. You take this total and apply 25. Supposingly, I have contributed 40,000 and 5,000. So I can't say 45 is within 50, so allow. 40 will be restricted to 25. 5 is within limit for allow. Separate calculation. For a moment, close your eyes and imagine, not you. For a moment, close your eyes and imagine there are two different sections. You are doing two different calculations. You can't merge the maximum limit of 80C, 80D. No. You have to do them separate. Are you understanding? You have to do this separately. Everyone is clear? Therefore, I say individual will get deduction twice because both categories have separate limit, and of course, HUF got only one limit for all the members. Total contribution restricted to maximum of 25. Limit we will write later, because we have to start by first understanding that medical insurance premium is not the only thing. There are 1, 2, 3 multiple different types of expenses which are covered. So let us learn what are the various types of contributions that I can make to take the deduction in the first category for individual, in the second category for individual, and in the only category for HUF. Let us see what do we have. First, you are paying medical insurance premium. Can you pay the premium of the first category people, which will cover self, spouse, dependent children? So take it in the total. Then we are not going to apply 25 ka limit here. We will apply 25 ka limit on the total. First, take the eligible amounts. Second, can you contribute for your parents, dependent, independent, resident, non-resident, senior, not senior? Take the premium. And HUF contributing for any member. Take it. So whoever you are contributing for, keep taking it. Keep taking it. Are you understanding this? Now, when I put a tick, it is on the understanding that it is an eligible contribution. For example, if I have contributed for grandparents, then I won't be taking it. If I have contributed for grandchildren, I won't be taking it. If I have contributed for independent children, I won't be taking it. If I have contributed for neighbor's spouse, you can't take. You can, but deduction I won't take. So the amount will be zero. In the total, zero will come. You understand? So whenever I will write these amounts, it is only if the amount is eligible amount. Ineligible amount won't be taken only in the total. First, be clear about this. And second, medical insurance premium. In life insurance itself, I explained this is for privilege category. It has to be a mode other than cash. Go check section 36 PGBP deduction of medical insurance premium of employees. There also we said non-cash. Medical insurance always has to be non-cash. Medical insurance ka deduction cannot be if you have made payment in cash, because this is privileged class. You have access to banking. Non-cash. That means if you have paid for these people, but you have paid in cash, you have to write nil. That won't be considered. In my total, I will take only the eligible expenses. I am not going to take the ineligible expenses. Are you able to understand this? So medical insurance premium, first category, second category, third category, all eligible, provided the person falls in the category and the payment is a mode other than cash. Fantastic. And are multiple premiums covered? So now you know why we call it premia. And now second. Everyone with me, please? Now the second thing. Hello? Everyone with me? If you have made any contribution to the central government health scheme or to the state government health scheme, in a lot of government housing societies you go, not all but lots. Within the housing society premises, there will be a government hospital kind of a place, a treatment kind of a place. All the residents of that society are government employees and their family members. You can go and take free treatment, free first aid. Government employees get free treatment in government hospitals. Government employees get dedicated hospitals for themselves in their own housing colonies. For everything you want in life, no, you need first paisa, then passion. To run these hospitals, government needs money. And what you are doing, please pay attention. You are giving a donation. This is in the nature of donation. You are not buying a policy for your family member. You are giving donation to the government to run free hospitals. It can't be. You can't say, sir, this was for benefit of self or spouse. There is no beneficiary. It's a donation. Now, normally donations are covered for charitable trust donations. We have a separate section 80G. But is this donation directly related to healthcare provided in our country by government in its hospitals? Because it is healthcare related donation, we are not covering in 80G, we are covering in 80D. Because it is healthcare related donation. Do you understand this? One thing we can clearly understand, that this does not have a category wise beneficiary. But for deduction purposes, what is the rule? You can take the deduction in this part ka maximum limit. You are not allowed to take the deduction in this part, and HUF is not allowed. The HUF cannot make contribution. You can make contribution, we won't give you any tax benefit. Understand what this part means. See, HUF is not allowed this deduction. That's easy. What does this part mean? Okay. I have a maximum limit of this category and I have a maximum limit of this category. Correct? If I have got any maximum balance remaining in this category, I can make this contribution and take the benefit. But if I have within the premium itself finished my maximum, then this is of no use to me. I can't utilize the balance remaining of this category for taking this deduction. For example, I have contributed to my premium and my wife ka premium, total amounting to 40,000 rupees. So have I completed the limit? Supposingly, someone does not have parents or has not contributed to their medical insurance. That means I have not utilized anything in this category. This full categorical limit is outstanding, unutilized. I can't bring the contribution here and take the benefit. Nahi, sir. If at all you want benefit of this point number 2, you can take if you have any balance remaining in this category. Otherwise, you are not going to get any benefit in the second category. I told you, you have to treat them as separate calculations. So your contribution is eligible only in the first calculation, not eligible in the second one, even if you have some limit remaining. And HOF is not eligible only. Now you know why we use etc. because medical insurance premium plus other things are also covered. So contribution to central government, state government health scheme covered in only the first category of individual, that also has to be by a mode other than cash. By a mode other than cash. But you understood where we will consider it? Fantastic. Third, there is a proverb in the English language, English, to nip in the bud. To nip in the bud? Nah? Okay. Second attempt. Prevention is better than cure. Prevention is better than cure. Correct? No. So you go take cure, bro. What else do I say? What else do I say? क्या? मराठी? मराठी में you translate? झाड वाढला पुडवी कापून टाका ऐसा कुछ छोड़ना, forget it. Prevention is better than cure. Exam is in English, bro. Prevention is better than cure. Everyone is comfortable. Why take medical insurance, then become unwell, then undergo hospitalization, and then make company pay that bill? Don't be unwell only. Don't fall sick. Sir, how? Sir, it is said that after the age of 30, once a year, after 40, twice a year, every 6 months, and after 50, 4 times a year, every 3 months, every quarter, you should undergo full body health checkup. After 50, if you are surviving in bonus, undergo full body health checkup. If you undergo full body health checkup, you will be able to identify any upcoming disease in advance. So you may be prepared for it in the form of your diet or medicine in advance only, rather than undergoing hospitalization. Hospitalization is generally required when you have crossed your disease, allowed your disease to cross a certain limit. Correct or no? So we now want to give you tax benefit for undergoing something called a preventive health checkup. Health checkup ka expense. And believe me, since the time they introduced this, lot of hospitals have actually started making health checkup ka packages. That following test will be done at this lump sum price. है ना अपने उधर आरती स्कैन्स काला चौकी Aarti scans his laboratory, not you, not this Aarti. She does not even scan the content properly. Arey, that's the name. It's a very big company and it is having a big pathology lab. Udhar, what is that junction called? Bhavya Supreme Junction. Chhod, forget it. There is this company, South Indian company, by the way. They have announced package. In fact, you go to any big hospital now. We in our area also have one hospital called Global Hospital, which is now renamed to Glen Eagles Hospital. They have their health checkup ka plans. Government hospital mein don't go for health checkup, otherwise you will actually need some medicines for spending some time over there. So who was that one who lives near KEM hospital here? Someone. Kidhar? पीछे मतलब देखो it's a long spread. हाँ तो ऐसा बोल. You know, living in that area and passing from that road also sends a smell in your nose, which is something that cannot be tolerated. But most big hospitals have healthcare packages now. Blood testing packages. Well, we'll do your CBC, ESR, different kidney profile, lipid profile. What exactly you're talking, I don't know, but do the test. Because government has introduced tax benefit for undergoing health checkup. You undergo health checkup, you are eligible for tax benefit. Bro, they need it more than you. Eligible. But HUF is disqualified for this also. So HUF till now is eligible only for one deduction. Which deduction? Insurance. Other deduction not yet allowed. But health checkup ka individual both categories allowed. And you incur for parents still allowed because obviously they need it more than you. In fact, they have given you one more privilege here. Can you believe this? Cash will be allowed. And they have to allow because now all pathology labs have their UPI ka QR code, or they have those credit card machines. Credit card machines they always had, but how many people paid through credit card? See, ultimately you go for blood test. You can't say that give me report, I will give you check. Check can bounce, report can't bounce. No, now you already know what is your report. So you have to make payment in advance. And for that they are allowing cash. So are they giving you some privilege here? By taking away something from you, they say that the total will be maximum 5,000. First category and second category ka total deduction will be maximum 5,000. So true or false, the maximum health checkup expense you should incur is 5,000. You can incur as much. Total deduction will be 5,000. Sir, that was incurred in cash. Cash. Still allowed. Supposingly, for self, spouse and dependent children, I have incurred 3,000. Independent, so I won't consider only, no. And for parents, supposingly, I have incurred 4,000. In cash, allowed or not allowed? Allowed. But I won't get 6,000. Please understand. If I take 2, then I can take 3,000 here. Or if I take this 4,000, then I can take. So I can take 2 plus 3 or 4 plus 1. That means once again between these two I will have to choose which one to give preference. Do you understand? Ultimately the total has to be maximum 5. So if I take 2, then I can take 3. Or if I take 4, then I can take 1. How to decide which one to give preference? Orally understand, then sum solving will come to know. Don't take this deduction in your sum first. Take this. Take this. Take this. There is one more coming up. Take everything. Take the total. You will come to know what is your total contribution without health checkup and see where you have more limit outstanding, more unutilized balance remaining. Supposingly in the premium itself you have finished the 25,000, then there is no point taking anything here. Then you better take this first. You understand? Wherever you have more outstanding remaining, more unutilized balance remaining, that category should get first preference. Supposingly I have finished this, so can I say I will take 4,000 here? Of course, I can take 1 year, but it won't help me because my limit is already over. There is total limit also, no? But don't give this idea. Some people come up with this idea. Their idea is, sir, is this limit already over? Already over. So what I should do is, from this 6, I should bring 5 here. Sir, that is not allowed because you've incurred only 4,000 in the second category. No. The total deduction that you're taking cannot exceed the total expense that you've incurred. Is that clear? So your options are 2 plus 3 or 4 plus 1. So you give preference to 2 or 4. Wherever you have unutilized balance remaining, give that preference. So what you will first do is take total before checkup and check where you have more limit. Give preference to that category for checkup. And what if the checkup ka amount was in cash? Still you can take it. No problem. Have you all understood? So preventive health checkup. Will individual get in both categories? Yes. But total will be restricted to 5,000 and cash is also going to be allowed. HUF won't get it. And last deduction here. Sir, if the patient, this is very, very important because I see a lot of students going wrong here. If the patient, not you. See, you who you this. You are this. You are individual HUF. You are incurring expense not just for yourself. You are incurring expense for these people. So when you are doing this expense, we won't see you. We will see who you are incurring expense. In the first category, it can be you, spouse or dependent children. In the second category, it will be parents. And in the third category, it will be member. We have to see the patient. If the patient is resident, you can be non-resident. Patient has to be resident. Senior citizen. Bro, You are 40, parents 65. You are 40, parents 65, and you are doing this for your parents. So it is eligible. Your age won't be seen. We are checking whom? Patient, resident, 60 years, not having insurance. This is a big problem that is observed in the healthcare sector. That people who are senior citizen, understand, senior citizen, their probability of having hospitalization is more than others. But it is precisely these people to whom companies don't sell policies. Because the company knows that this guy will buy policy by paying 10,000 premium and will have hospital bill of 1 lakh. They don't sell policies. So when a senior citizen has hospitalization, full money is paid from own pocket. Do you understand? Why full money is paid from own pocket? Because there is no insurance. So ladies and gentlemen, boys and girls, we are going to give you deduction of your hospitalization expenses of that senior citizen. In the first category, you can be the patient. Your spouse can be patient. Your children, if senior citizen, not having insurance. Arey, you are 80, children 60. Why not possible? But more probability over here if you understand. You are 40. Parents are in their 60s. Parents are residents. And insurance companies are not selling insurance. Because they find it a loss-making proposal. So you are paying hospital bill of your parents. Soon. You are not senior citizen. Will you get deduction? Yes, because we don't have to see you. We have to see the patient, and this benefit will be given to HUF also if the member of the HUF is resident, senior citizen, not having insurance. Ladies and gentlemen, you have to be very careful about this. First of all, patient has to be resident. Secondly, patient has to be senior citizen. And thirdly, very important, patient should not be having insurance. By chance, if there is some foolish medical insurance company who is ready to sell insurance to senior citizen, supposingly parents, senior citizen, you paid parents ka premium of rupees 17,000. Then admission to hospital took place and hospital ka bill came to 85,000. Everyone is with me? First of all, we are not checking you, we have to check the patient. Patient is resident, patient is senior citizen. Correct? Hai? So that way, we feel that, sir, hospital bill is allowed. But sir, this patient has insurance. Not allowed. Sir, but tell me one thing. Between 17,000 and 85,000, what is beneficial to take deduction? But not allowed. Sir, why? Because you have insurance. You don't have the option of choosing between premium and hospital bill. If you have a premium, you have to take it. Then this won't be allowed. This will be allowed. This will be allowed only if you don't have insurance. It has to be not you, not you. Who has to be? Patient. Patient has to be resident, senior citizen, not having insurance. Patient has to be what, bro? Resident, senior citizen, not having insurance. Then will be eligible. You will be eligible for deduction of hospital bill, which also has to be non-cash. In this entire section, cash is allowed only for preventive health checkup. Entire section, cash is allowed only for preventive health checkup. Everyone is clear? Hospital bill will be allowed if you can be anyone. Your patient has to fulfill 3 conditions. Resident, senior citizen, not having insurance. Clear hai? With this, we realize that in the first category, we are getting deduction of everything. Are we getting deduction of premium? Bolo. Are we getting deduction of premium? Yes. Are we getting deduction for contribution to health scheme? Yes. Are we getting deduction for health checkup? In fact, cash also allowed. And are we getting deduction for hospital bill also? Provided not you, but the patient is fulfilling the 3 conditions. Second category, we are only not getting the health scheme wala. Otherwise, everything. And HUF will get 2 benefits. Insurance and hospital bill. Subject to the conditions. With this, we will get the total of the first category, the total of the second category, and the total. We will take the eligible amount. Listen. Patient has insurance. So hospital bill we will take 0. You pay premium in cash, we will take 0. You pay for independent children, we will take 0. If you have fulfilled conditions, so we take those amounts. We take those amounts and come to the total. first category and second category, anyways we have to do separate calculation. So this total will be restricted to maximum of 25,000. Actual or 25, whichever is lower. Just like 80C was actual or 150, whichever is lower. This is actual or 25, whichever is lower. As I always and continuously told you that second category is separate. So here you will apply the limit separately, and remember one more time, you are never going to merge and mix. You are never going to merge and mix. You will keep them as two separate categories. And HUF, of course, is a separate assessee only. So for HUF again we have maximum 25,000. ये क्लियर है, ये करेक्ट है, एक्चुअल और मैक्सिमम 25,000. So what is the limit for individual first category? 25. Individual second category? 25. And HUF only category? 25. But if your mitro once again patient, not you bro, not you bro, not you. You are covered only in the first category. Second category mein we will not see you, we will see your parents. Third category mein we will not see the HUF, we will see the member. If your patient is resident senior citizen, resident senior, whichever section gives higher benefit for senior citizen, it is always going to be resident. So if the senior citizen is non-resident, so deduction allowed, lower limit. If it is resident senior citizen, so wherever we have written maximum 25,000, that maximum 25,000 will change to maximum 50,000. Whether this or this, the maximum 25 will change to maximum 50,000. If your patient is resident senior citizen, then the maximum limit is going to change. Is that clear? If you have little presence of mind, so you will realize one thing. Total mein, where is the question of insurance? Total ka limit is, supposingly there is no hospital bill. Only premium ka limit is what? Tell me. Supposingly you have not paid any hospital bill. So what is the total premium ka bill limit? 25. In that also, if your patient is resident senior citizen, the limit will change to. So basically 80D has two limits, 25 and 50. Normal limit is 25. Non-resident limit is 25. Non-resident senior citizen limit is 25. Resident senior citizen limit is 50 for all the three. Is that clear? Somebody with little presence of mind should understand, this should hit you, click to you automatically without me telling you, that in case I have the deduction of point number 4, that is hospital bill. Hospital bill was point number 4, no? I am eligible for point number 4. By the way, to be eligible for point number 4, what are the three conditions that patient has to fulfill? I don't have to. Resident senior citizen not having. If I am eligible for 4, so I am sure that in that case my maximum will be 50 only. You know why? For making the limit 50, there are two conditions. What? Resident senior citizen. Correct? Hai? And for getting hospital bill, there are three conditions. What? Resident senior citizen not having insurance. Anybody who is fulfilling resident senior citizen not having insurance is obviously fulfilling the 50,000 ka limit ka condition. So if you fulfill, bro, once again I want to show you, if you fulfill these three conditions, so you have already fulfilled these two conditions. You understand? So anybody who is, this will work as a hint in your exam, direct test in exam. If by chance I have taken hospital bill ka deduction, by being careful, resident senior citizen not having insurance. If I have taken hospital bill ka deduction, that means I have to mentally be ready that that category ka total will not be restricted to 25. That category ka total will be restricted to 50,000 because I have fulfilled the two conditions of 50,000 in this one. Understood? Everyone. So if you are ever asked what is the limit of 80D, your first answer will always be 25, 25, 25. But the limit will become higher limit of 50 if it is paid for. You know, you can be non-senior, but if you are paying for parents who are resident senior, so your category limit may be 25, but that parents category ka limit will change to 50. If the patient is resident senior citizen, then that category will be. Chalo, so you have to tell me maximum limit of the categories. Okay, you are 20, parents 40. So first category limit 25. Second category limit 25. Very easy. You are 40, parents 60. So first category limit, and unless question specifies, you assume resident. You are 40, parents 60. First category limit 25. Second category limit 25. How? You are 40, parents 60. क्या कंडीशन है? तो senior citizen is what? More than 60 है. So what did I ask? What was my question? क्या? You are 40, parents 60. You are 40 मतलब expense. इतना गंदा इंग्लिश नहीं है. Your age is 20, parents age is 40. Now tell me, you completely spoiled the flow here. Your age is 20, parents age is 40. First time I am doing it in 15 years. When I say you are 40, parents 60, it is understandable, but I don't want any risks. Your age is 20, parents age 40. First category limit. Second category limit. Your age is 40, parents age is 60, and when I also mentioned that nothing given, matlab it has to be resident. 40 and 60 age. So first category limit 25,000. Second category limit 50,000. Your age is 60. Parents age 80. First category limit. Q 60 is less than 60. What is my question? Question repeat करो. My age is 60. So what is my limit? So what? You are on some drugs or something, then what am I trying to make you understand? So you tell me when limit will become 50,000. You will have to tell me now. What is definition of senior citizen? 60. Then is 60 equal to 60? Say is 60 equal to 60? I asked you what? 60. So how your answer came 25? I want to know. What was my question? 60. Your age is what? 60. And what is your answer to that? 25,000. So what have I explained and what have you understood and what are you answering? I want to know that. How your answer came 25, you answer. Otherwise, either you will leave the class or I will leave the class. You are doing it on purpose now, it seems. If you are not you did not understand my question. What was my question? In fact, this time I was so specific, your age is 60. So how your answer came 25? Please, can you help me? So how your answer came 25? Are you answering without thinking? Am I playing a game with you? Second time you all have spoiled my flow here. I start from the start. Your age is 20, parents' age is 40. You have to just tell me the category ka maximum limit. Are you not clear about the limits? What is the limit of the first category, second category and the third category? General answer always is 25,000. When will this 25 ka limit become 50,000 ka limit? Senior citizen. Who has to be senior citizen? You. No. Patient. That means the person falling in that category has to be senior citizen. What is senior citizen ka definition? 60 years. So when I say 60 is that senior citizen, and I told you that when nothing is given, assume that it is resident. Non-resident will be specifically mentioned. So what is prohibiting you from giving the correct answer? You did not understand the concept. You did not understand this line. You didn't understand this. So when I say resident 60 is ka maximum limit will change from 25,000 to 50,000. You say I understood. Then I ask you 60 years, so how your answer is coming 25? How? How? क्या? Pension? Patient? When I am asking you your category का limit, that means you are the patient. When I am asking you parents का category का limit, that means parents के लिए you can contribute for yourself. You have contributed for yourself also. You have contributed for your parents also. The one which you have contributed for yourself, that you will apply first category limit, and the one which you have contributed for your parents, that you will apply the second category limit. That means whenever you are applying the limit, you will check the person for whom you are contributing, which can be you also. If you contribute for yourself, we will see your age, and if you contribute for parents, we will see parents ka age. Now I am asking that age, and I am asking you the maximum limit. If you don't understand the question, interrupt me and answer, or ask, sir, I have not understood. Nonsense you will speak, no, I will not tolerate. Any nonsense anybody is speaking randomly, and not speaking is also not allowed. No? Nobody is doing a favor on me by coming to class. You have contributed money in the first category also. Eligible amounts. Now suddenly you will say no deduction, sir, because I am assuming cash. So I am saying eligible amounts. Everyone is resident unless mentioned. You have contributed for both categories. Now I am giving you the age of the people for whom you have contributed. According to the age of the person, you will apply again that 25 or 50 is the maximum limit. That is not deduction. So actual or maximum, whichever is lower. Now I am giving you the age, and you have to tell me the maximum limit of the category based on age. Maximum limit changes with age, no? So I was giving you the age and asking maximum limits. Your age is 20, parents age 40. You have contributed for both. That means you will get deduction in both categories, subject to maximum limit of both categories. When your age is 20 and parents ka age is 40, so what will be limit of the first category? 35. What will be limit of the second category? 35. When your age is 40, parents age is 60, we are assuming resident unless given. And second, you have contributed for both. So we have to check that contribution will be restricted to what limit? When you are 40 and parents 60, so your categorical limit will be 35. And parents categorical limit will be. Now why it has become 50,000? Because parents are senior citizens. When your age is 60 and parents ka age is 80, so what will be your categorical limit? 50,000. Why 50 this time? Because you have also become senior citizen. No? And what about parents? 50. Why? Because they are also senior citizens. So both categories ka limit can also become 50,000. Your age is 60 and your parents' age is 40. Your age is 60. What is your category ka answer? Maximum limit ka answer 50,000 because self. And parents 40. So what is that category ka limit? 20. What's your doubt? It is not possible, sir. That I am 60, parents 40, not possible. Is that your doubt? ठीक है. You mean to say that my last question is wrong question. I said what? You are 60. I said 20, 40, you gave me the answer. Finally, you gave me the correct answer. 40, 60, you gave. 60, 80, then both will become 50, 50. Now, my last question was, you are parents, category limit ka answer you can give. First category limit, second category limit. Your doubt is, sir, it is not possible. Okay. Mr. X, okay, is 80 years. Mr. X is 80 years. He has a son, Mr. Y, who is 60 years. Correct? Hai? If Y contributes for himself 50,000 and parent 50,000, 80 years, hai na? Both are senior citizens. Mr. X gets married to Miss Z, who is now Mrs. X. Just gender, we are not writing Z, who is 20 years. Not possible. So for this guy, she is mama. Tell me if it is not possible, 80-year-old cannot get married to 20-year-old. Then you don't know what national leaders are doing. Possible hai? Now if we contribute for this mama, so own category limit is 50,000, but parents category limit will be. If we contribute for father also, then the parent category limit will change. But he has not contributed for father. He has contributed only for mama. So 20. If you think this is complicated, so there is another twist in the story. Z is 20 years. Z has a mother also. Otherwise, how she will get birth? Z has a mother. F, who is 45 years. Listen, her mother is 45. Because this is daughter's house, no? So mother had regularly visited the daughter's house. For meeting her daughter, she used to come, F used to come to Z ka house, which is also X ka and Y ka house. Somewhere they got in close connection with each other. And they married each other. Wait. Now I'll tell you what are the complications here. Suno. Is this mother and mother's mother Nani? Nani is also wife. Okay, listen. Is this daughter? Daughter's son, grandson is also husband. You understood? She is wife. Wife's daughter is own daughter, but own daughter is also own mother. Arey, father's wife also. No? Correct hai? He is what? He is mom's husband. So father also, but husband's son. So son also. Correct? Correct or no? Okay, wait. Daughter's husband. The son-in-law. Son-in-law is also my father. Arey, wife's father. Arey, she's daughter, no? How daughter? Wife's daughter is own daughter, no? So can I say this is daughter's husband? Daughter's husband becomes son-in-law for wife, but son-in-law also happens to be father. Nahi? Okay, listen. Is this his wife? Wife ka son? His own son? But he is wife ka father also. Arey, to own son is your father-in-law also. Your own son is your father-in-law. Every person in the story has two relations with every other person. Are we clear? So finally, own age 60, parents age 40 is possible. And what are you going to apply as maximum limits? Self category 50,000 and parents category 25. Is that clear? This is the main crux of 80D. Main part of 80D, believe me, is over here. We are left with some other general points. But main part, take the eligible amounts, take the total and calculate the deduction. That was if you observe point A. In point A, I made the full table where I wrote assessee and I made the full table 1, 2, 3, 4. Let's go ahead. Second, this has to be out of your taxable income. In 80C, if you remember, we wrote a line that this contribution can be out of any money. Can I borrow money and make contribution? I still get deduction. But here, this contribution has to be made out of my taxable income. I cannot make this contribution from any random income. It has to be made out of my taxable income. Everyone is with me? Next, in this section, did you observe cash was allowed? But only and only in health checkup. Do you remember in other cases cash not allowed? Cash was allowed only in preventive health checkup. Correct hai? लिया नहीं होता. You don't get insurance premium. You pay insurance. Speak correctly, think correctly, speak correctly. Otherwise, you are saving gobar in your brain. Speak correctly, think correctly. You don't get premium. You pay premium. You don't have that much sense before you speak. Speak.
Sir, हमने medical insurance cash में pay किया है and we are not giving, right?
We won't get. We are not taking it. We won't get. If you pay premium in cash, you are not eligible. Go ahead.
So अगर हमने उसके बाद में hospitalization जो हमारा हुआ है preventive तो उसका हमें मिलेगा.
Because you are not taking deduction of premium, you feel that you should be getting deduction of hospital bill. But do you realize what is the condition for getting hospital bill ka deduction? The condition is not that I have taken premium deduction. The condition is that I should not be having insurance. Do I have insurance? That's my stupidity. If I have paid in cash, I am going to lose everything. Chal na baba. I feel I should leave this and start writing on the board now. That's the only thing left in my life now. Chal yaar, you're not getting screwed. Abhi jana. Chodo. Who was a good singer? You know? हाँ. Start. ऐसे start. Start. वो ऐसे कैंडल लेके गुमनाम है. अभी what do I do? चलना रे. आरती गाएंगे. सुख करता. अच्छा आरती. ये भगवान. Wait a minute. Just give me 1 second, please. हाँ, इसी बात पे the tab has started working, ladies and gentlemen. So cash allowed only for health checkup. Everyone is with me? Next, a very important point. Everyone, please focus. Insurance companies these days have started giving packages. What kind of package? A lot of insurance policy holders these days are seen as migrating to other companies. For example, I have New India Insurance ka medical insurance policy. I find Star Health is giving me a better policy, a better deal at a lower premium. I'm actually migrating from New India to Star, and Star is considering my past premium and carrying forward my previous policy. Like people shift their loans. Like people do mobile number portability from one service provider to another. People have actually started migrating their insurance policies. So insurance policy ka companies, medical insurance companies have the fear of losing customers. So they are now giving an offer that if you give us lump sum premium of multiple years, we will give you discount. If you give us what, bro? Lump sum premium of multiple years, so we will give you discount. Supposingly your annual premium is 20,000. Everyone is with me? Annual premium is 20,000. So what is your 5 years ka premium? 1 lakh. Pay 90,000 and we cover you for next 5 years. They are giving you 10% discount. Your benefit is that discount. Their benefit is now 5 years. You can't go anywhere. You understood? And a lot of customers of late are seen buying bulk policy of multiple years. Instead of paying annual premium, they are paying advance premium multiple years. Very logical, business sense, both parties. But the tax issue is coming. When I was paying 2020 every year, I was getting full deduction within 25. But if I am paying 90,000, it will be restricted to 25. And the next 4 years, I won't get any tax benefit. You understand the problem here? So auntie made this problem a little easy for people by saying, this deduction I will give you on SLM basis over those financial years. Over those. So can I say basically, instead of taking 90 restricted to 25, what has auntie done for us? 90 divided by 5. 5 years policy, no? So every year 18. And that 18 is within limit. Understand? First we were giving 20 was within limit. Now we have decided to take discount of 10%. For that we have to pay advance for 5 years 90,000. But 90 was making me lose tax benefit. So what are we saying? Don't take 90 subjected to limit. Divide it over the life. Auntie has done a logical thing, sensible thing. But auntie is auntie after all. So what is going to happen in this? It is not as easy as you think it is. This is really, this is more complicated than your personal lives. Because auntie has played a very dirty game, and auntie ka game you leave. Institute actually played this game in an RTP. And everyone was confused why I am not getting the correct answer. I'll explain the game here. I'll take an example where your premium is 90,000 for 5 years coverage. So instead of taking 90 subjected to limit, I have to spread over 90 divided by 5. In my example 1, my policy has started on 1st April 23. That means what will be the end date of my policy? 31st March 28. 5 years ka coverage I am taking by paying this advance. So which are the financial years that are covered here? Am I covering financial year 23-24, 24-25, 25-26, 26-27 and 27-28 March end? This is 1, 2, 3, 4, 5 years. What am I going to do? 90,000 divided by 5. This means I am going to take deduction of 18, 18, 18, 18, 18 over these years. And is this 18 within the limit? So good auntie has solved my problem. Otherwise in 23-24 I was getting 25,000 and remaining 4 years I was not getting anything. Good auntie, thank you. But there is one big problem here. Big problem. First my question to you is true or false? Everyone should take policy on 1st April. False. Can that be another date? For example, in my example 2, my policy starts on 1st October 23. So what is going to be end date this time? 31st September. You go kill yourself. There is seashore here. I will take you along with me and I will throw you down in that sea. 31st September. And when is your birthday? 30th Feb? You understand, end date will also shift by 6 months. Was this also 5 years? Example 1. This is also 5 years. Only the start date has changed. Once again, I have to do what? Total 90,000 divided by years. How many years? Sir, this was 5. This was 5. From year to year. This is how many years? How many years? I am giving you start date and end date and I am asking you to tell me how many years, and like literally you are actually calculating. 4. 4 ke 6 ke 5. Arey 5 years ka policy. So how 6? Because the word used by auntie, ladies and gentlemen, observe carefully. Auntie did not say calendar years. Auntie said financial year. Check this start date and end date. In this period, do we have 23-24, 24-25, 25-26, 26-27, 27-28, and we do have 28-29 as well. Mitro, these 4 years are full years, and then we have 6 months here and 6 months here. So total coverage of you is only 5 years, but the financial years covered here are 6. Ladies and gentlemen, boys and girls, in this case, your answer is going to be 90,000 divided by 6, and your deduction in these years will be 15, 15, 15, 15, 15, 15. Now, if this comes in MCQ, you will see, sir, 95 years, 95 years. So your answer is 18, and 18 is there in options also. But institute has given 15,000 as the correct answer, and you are wondering, sir, is there a printing mistake? And believe me, that RTP question is there in my additional question bank. After saying this much, that auntie has given prominence to financial years here. I know that there will definitely be at least one of you all who will at the time of solving that question message, sir, is there a printing mistake here? Believe me, you will have to face whatever I speak. Whether what I speak you like or you don't like, at that time you will listen to everything that I will say. Because I am making it clear in front of you. Word used is financial year. While the total tenure is 5. But listen, ladies and gentlemen. Or take it like this. You want it, you can write a note like this also. Listen to this. If any policy starts on 1st April, then policy years and denominator will be same. If any policy starts on any other date, so the denominator will be 1 year extra, because financial year will be on this side and this side. You understand? For example, here we have 4 years, but we have 6 and 6 months here. So effectively it is 5 years, but the total number of years become 6. Whenever policy is taken other than 1st April, denominator will be 1 year extra. Whenever policy is taken other than 1st April, denominator will be 1 year extra. Is that clear? Everyone? 100%? This is the game played by auntie only with this terminology called financially. If she had not used this financial year, then this problem wouldn't have arisen. But she has used financial year. We have got no choice. We'll have to tolerate it. Clear hai everyone? That's your section, ladies and gentlemen, 80D. Everyone clear? All right, fantastic. We are done with a major part of our chapter deductions under chapter 6.